One way or another. Get you. Check 1, 2. Check 1, 2. One way or another, I'm gonna find you. Check 1, 2. Just a few minutes here, guys. I gotta get the setup. Hold on. These glasses are helping me. Not so sore on my eyes. So sore on Mondays now. Check 1, 2. I can always tell when my daughters are on my computer here over the weekend. Hold on 1 second here, guys. Get rid of this here and this here. Good morning out there. How y'all doing? Happy Monday. Just a quick second here. I got a couple things I got to do. One more second here, guys. I'm going a little bit late this morning. I've got stuff here that I'm doing in the background. We're getting an end of the year kind of stuff. All right, so where did I leave off with here? We left off last Friday with a nice squeeze into the bell. And when we left off, give me 1 quick second here. What's going on here? Am I in the wrong place here? Hey, what's going on? One way or another, I'm gonna find you. I'm gonna get you one way. Here I am. I'm here. Just having a hard time getting on stream yet this morning. I'm gonna type 1 second here. Oh, I got a thumbs up and then I didn't get a thumbs up. All right, cool. I'll give it a minute for everybody to come in. So where we left off on Friday. So this morning is not what we want to see. Let's say that right out the gate, right? We don't want to see. Well, it's not really that would not. It's not really not what we want to see. Let's rewind. We won't rewind the entire way. Let's rewind to this overnight. We went a little too high, a little too early, in my view. We did put price up into 4 a.m. to see if it would be accepted into the U.S. market, and it was not. Now, not only was it not, but dealers were likely not neutral at that point. Let me turn this up. I got it. My sound's wrong. Check 1 2. Check 1 2. There we go. A little bit too high. You can see from the overnight. I don't know if we can show it here, but I don't know if this actually shows up. But here's 4 a.m. right here, and you got to remember we go from market to market, not mark to market. We have dealers that offer a price from each market, right? And we come into the U.S. market, and what do dealers do? Immediately unload on the market, and there was no U.S. buyer or New York buyers there, were there, at 4 a.m.? None. And we have to talk about that because where we left off on Friday, I wanted to see the market squeeze balls off into this morning. And we did twice. We squeezed up into 4 a.m. We squeezed up once more here and immediately sold off on the hourly trigger. Not another good sign, is it? And of course, I'm bleeding this morning. I have a lot of money out. Not a lot, but I got a significant trade on for today and further out in time. But even with the wanting to squeeze up over the weekend, there was a caveat, wasn't there? And I know on Friday, I had a lot of blowback on Friday on this on stream in our community. And then I went on to Twitter and posted about this over the weekend. I think it was Saturday morning or Saturday afternoon. I made a kind of, so it was a detailed post, but it wasn't in depth. But I did say inside of that post, stop trusting bulls, right? I think in the post more specifically, I said, whenever we come into a low from the springtime until now, I would not trust on Fridays or not just Friday, but like any major low. I would not trust a bear, not really a bear, like a doomer. Like we're gonna limit down and crash over the weekend or some shit. Black Monday, you know what I mean, right? In that I was switching my view on that. I was going to switch my view from not trusting those doomers to no longer trusting buyers, right? Or bulls, or FOMO bulls in particular. If you get like the FOMO bear and then you get the FOMO bull, I don't trust the buyer anymore. And I got a lot of blowback from that on Friday, of course. And I wanted to like just make that known on public, on Twitter. Now, even though I think we're going to squeeze up, we squeezed up until 4 a.m. and they bought it right off the bell again. And people were unloading again. And if you remember on Friday, what did I say? I said, I'm not going to trust these fucking buyers, right? And I said, the first chance they get, they're going to want to sell. And they're going to do it. There's like 2 more places above. There's like, let's go over here and look at this. So we're not even done here. You've got this layer here. I think it's 682. And then there's another one at, I believe, 685 or so. It's like 685. It's this high right here, basically. So there's like a place right here. And there's another one somewhere up in here. It's actually come down, I think. I think it's now lower than it was on Friday, the must get above level. And my thesis was on Friday was the important thing for me was So I was talking to my wife this morning, and she was asking me to explain this to her, and my point to her was that when we rolled right here, this was expected. And do you remember when I said there's a you remember a lot, like we rewind a little bit, I'm like, there's a bull trap in here. Or excuse me, a bear trap. I'm like, there's a bear trap in here that the bears are thinking we're going to go down here. I was like, we're going to squeeze up. This was Veterans Day, I believe. And on the hourly trigger right here, I then came back and said, there's now a bull trap. And I felt very unconfident. And I said, close your longs. This was like Tuesday, then Wednesday, right? And of course, that became a meme, right? Is it a bull trap and a bear trap and a bull trap and a bear trap? And I know it's funny, and I found that funny too. But there really was. There was a fucking like Tuesday, like Veterans Day. There was an expectation we'd roll in here. You see it? We would roll to the downside. Instead, it was liquidity grabbed to the upside. And then we come right in the next day on the open, and I said, there's a fucking bull trap now. they're gonna sell us. Now, when they sold us on, I believe, Wednesday or Thursday, right? I think Wednesday closed and a Thursday, parked us sideways, right? I'm like, we're going sideways with a sideways correction and maybe go up. And then at the end of the day, by like 3 o'clock, I was like, this is looking really bad, right? And I'm thinking to myself, we'll blast down maybe here, maybe, and immediately recover and go up. That's what I was hoping for. And instead what we did was we ripped all the way down here, and then we got shanked again on Friday. That's not good. Not only is it not good, but it's broken almost every rule I have at this point. Almost every rule. If you go through like all the 3 indexes, I always tell you guys, like the first low, right? I don't like that, but it's not the end of the world for the market or for even if it leads to a correction or a major correction or a crash or a bear market or whatever. This isn't really too bad. It gets worse though when you're starting to make the new low. Now on SPY we didn't make the new low, but on SPX we did. We did not on ES. So that's positive. So you're kind of looking for, at this point, for strength. I think I've said that Friday and excuse me. I think I said that on Friday. I want to see certain things. And then on Saturday I said that too. I was like, we need to do this, like almost immediately. And at this moment we're not doing that. And not only are we not doing that, but you're now getting across. You can actually see it right here. We're getting the roll here of the hourly trigger. The hourly trigger is now underneath the daily trigger. And in the statement that I made about not trusting the buyer anymore leads me to this. Buyers will tell you that we're going to have a holiday rally, we're going to have this, we're going to have that, and market top's not in yet and all that kind of stuff. But I really want to see if they take every opportunity on any high to panic sell. This is very common price action, what we're experiencing right now, when there's panic and people are not telling you that they're panicking. They're freaking out. I don't know if it's a fully freak out. It's the end of the year. The year is over. So if you're in a bull run, that would be a time frame, 1.5, 3.5, 5 years, 7 years. Then you have a time frame of a year. So you have accumulation through the course of a bull run and distribution. And then you have the accumulation over the course of a year and distribution. And on smaller frames, too, they overlay over each other. You get the accumulation in January, and some of that accumulation is for just a quarter. Some of it's for a full year. You have 6 months, 3 months, a month, a week, and even a day. Yeah, and a midweek, too. You got a Wednesday OPEX, too. Then you got a daily OPEX. So you have someone that might buy something or sell something for one day, and they close that trade out at the end of the day. Do you understand that the length of a trade? And so even at the end of the year, this is not uncommon. You have people that have been accumulating, in this year case, accumulating, and they're going to distribute something. They're going to tax loss harvest their losses for the year. They're going to call their big winners, and they may put some skin in on stocks that have done well but maybe haven't overly produced, or just go a little bit more risk offish and say, hey, I'll see you in the springtime, right? I'll come back in April and find out if there's a nice low and we're not in a bear market or a down year, and maybe I'll get long again. And meanwhile, into the end of the year, you get a lot of noise around that. There's noise everywhere. There's, we're going to moon, the top's not in, the this and the that, and all the other things. It might not be in. Top might not be in here, but you're going to get a lot of noise. And so when we talk about following this year's thing has been stay with the market. What is the market doing? Rather than treating every day like it's a new bull market, right? It's a new bull run, bro. New all-time high. We try to stay with what the market's doing over the course of a year. Just turn this off here because this means nothing. So top line is this. When I was coming in to Friday, all of this price action is, to me, kind of bearish. It doesn't mean the top's not in, doesn't mean the bull run's not intact. Just, it doesn't look good to me. And it's hitting every rule that I have to watch out for a risk off type moment in the market. Not only that, but just looking back over here a little bit, like scaling out a little bit over here. This behavior here is not, so far, has not proven to me that this looks anything other than what? Some distribution, right? Kind of see it right there. And you know what they're trying to do is they're trying to, send us down here for an actual correction. That's what it looks like to me. And it's the end of the year, it's not the beginning of the year. It's not the seasonal low of springtime. It's not the seasonal low of the fall, or is it? We had a nice little run here. We had a kick-ass October, right? We didn't see any seasonal low over here, did we? So if that's the case, if we had seen something like this in October or September, like maybe we fail in here and went down here, I'd be like, yeah, this is good. Just seasonal fall low. And I can get behind us not having a major low. We just go up. Trades intact, and we don't correct, and we blow off into the end of the year. I'm down with that trade too. But you have to do some things for me to feel that, or think that that's intact. And let's just look at where we are right now. We got what? We got this right here. What does this look like to you? I've shown you this before, right? I think I showed you this on Thursday. This all looks good here, doesn't it? Let's look at this real quick. We have a brief break above the hourly trigger. Right? And we sneak this in pre-market. Not cash market, but it is 4 a.m. It is the New York market, and immediately it's down. Give you another chance to get out here in the morning, this morning, until conditions improve. What are conditions improving? A high, right? And then another high, and then we're off on the hourly trigger. So they're giving you a chance at 4 a.m. to unload. Give you another chance right here to unload again. Get out. And now we're selling again, right? More panic down below. Not the best look. Not only not the best look, but we have yet to mess with this trade up here, nor this trade up here. And these are real panic sellers up here. So we're not even there yet. And you have panic, the first chance people get, they're selling. We're not even dealing with these guys yet up here. So we're not even up there yet, are we? We're not even up here. Oh, hold on here. No, I don't think we can't. I don't think we won't flush these guys out or can't go up here, but there's a fair chance of a downside move here. I don't know if the market's ready for that. Here's your weekly trigger right now. We could easily trade 640, 652, 653. I think it's very viable. All of this in here. This is 653.64. This is 647. And then this is the real support down here. You can see where all the real support is right here. There's nothing in here. There ain't nothing in there. You had a bank of buyers there, bank of buyers there. The real, like, that's kind of where the real support is. So like 640 seems reasonable to me. I don't know if we can get there right now. I don't think we can. But if you have this panic here, we're early. You know that the panicans are going to be up here selling this one. I'm going to try to sell it up here, down that one. And unless we can wear those sellers out, those panicked sellers, unless we can wear those guys out, the way is lower. Let's take a look at where we are. Let's do this over again this morning. I want to show you this price action here because I've seen this before. I think we talked about this specific price action in the past. I wanted you to see where that, and I want to show you a couple other things here, but sometimes you'll see stuff like this. Sell it down. We're off and out of here. When I said that I hadn't seen this price action behavior since February, April. Where was last time I saw this kind of price action? There was a place that I was showing you guys this. Not there. I got to try to find it. I was showing you some price action that was very similar to this right here. And you can see this behavior here is like, this reminds me of, like lying bulls. That's the best way I can say it. Like every chance they get, it's like sell down, New York again. This is the end of the day on Friday, sell it down. This is 4 a.m., sell it down. And even right now, this is the rip higher into 9:30, like 9:30 to 10 or something, and they're selling again. So this is de-risking behavior in my viewpoint. It is. So let's take a look at this in a larger time frame here, and see what's going on. So let's start with a month, where everyone freaks out and goes crazy. We still haven't given up 80% of the month yet. That's good to see. Believe it or not. So this candle right here, this is your monthly so far for November. So on a month basis, we're fine. Believe it or not, I know that doesn't seem like it. It doesn't seem like everything's fine, but this is the full candle so far for the month of November. We haven't given this up yet. If I measure this right now, I don't really need to measure it, but this is 3.61 percent. So we got to keep, or we're gonna lose. We can lose 20. That's 60, and then another 10. Let's call it 70% of this. That's about right here, about there. And I'm going to show you this one right here. See that line right there? Right about there. I'd prefer to not lose this one right here too. I like the idea of the low being somewhere for the month. Like any back testing, come no lower than right about here. Theoretically go about that deep. And you'll see price get pushed down. Like these are sellers, they're getting out, right? But as long as we don't lose this monthly candle, we're still okay, believe it or not. So we'll leave these two up right now. And if we lose that, though, if we do lose this What is this? 662 or 66, 666, right? Now this is a lot of memes come out of this, right? Oh, we're going back down to 666 again. We are spending a lot of time here. We are spending a lot of time here overall, like pounding this level out, which is positive. Believe it or not, even with the panicins and the non-panicins and don't trust the bulls, we are spending a lot of time here. This is good. I'll show you in smaller frames. So this is a positive. But where are we going if we lose the month? If we lose the month, it's at least 650. That's the start. It's pretty low, right? It's not good. You don't want to see 650. Capped it. I don't want to see 650. And I don't either. Don't get me wrong. I'm a bull, right? I'm a perma bull. So I'll leave this down here. Now we're going to look inside of these candles. We're going to look inside of these monthly candles right now on a weekly basis. Now remember we started, we had a red week. Then we had a second red week, right? So you got a red week right here. We set up. We got another red week. I'd like to see us close green in this week. That didn't happen. And now we're starting a new week off in the red. These are 3 candles, right? 1, 2, and 3. And I showed you on Friday some prior candles clusters, right? Where we had a down move. This is actually, they got 1, 2, 3 over here, right? 1, 2, 3. This last candle is green. That's good. This last candle is green. That's good. We have not finished out this week yet, so we're starting on the red. We really want to end this week green, don't we? Right? For three candles. Here's 1, 2, and then 3. This one moons. That's good to see. What happens over here, though? This is kind of important. This is February, right? You got 1 red candle. You got 2 red candles. And your third one, and that failure leads to a pretty significant down move, right? Risk off, right? So this week's important, isn't it? I would say, I'm kind of being gentle here, but this week must end green. I'll let you know that. Like by Friday, this candle needs to be green. This candle needs to be above 675, basically. And we're gonna talk about. Can I get? Let me just check this really quick. Go back to the month really quick. Yeah, we don't need to worry about that right now. That was just for measuring. Go back over here. And we know a few things, don't we now? Just on a weekly basis, we know a few things. We know that we definitely do not want to come down here. That's bad news. So if you're a bull, you want to be paying attention to our new favorite friend. If anyone remembers like 340, he's reminding me a lot of 666, but 666.22 is a big number, and 663.36 is a really big number. These are doorways to new lows. And not only that, the targets down here are kind of vicious. The targets down here are 651.54, 650.21, the weekly trigger. And that's more than likely going to be, this weekly will come up a little bit and be somewhere in here. This is 645. You can see where the buyers are here. Smash, smash down, smash down. And then this is the moment we went up and back down again. It's like right here. You probably expect to see the weekly trigger up here. That's 645.51. And if we begin to break below this 645, it brings in all kinds of weekly targets. 615, 607, 591, a big old gap down here at 567, and a monthly trigger. You can see the targets. They're big, right? Doesn't mean we go all the way down here, but why not? I mean, if we're done for the year, I think we should go down there by springtime. By like April, maybe even May, it takes to get down there. But these are juicy targets down here. We talked about starting to look lower, didn't we, last week? I said, don't be trusting the buyers. And this looks pretty juicy, doesn't it? Get down there. It could take some time, right? Some work to get down there. Won't be that easy. It's not going to be like, hey, we crash tomorrow. I don't see that in any way, shape, or form. We still haven't closed the door yet here, but it's looking pretty bad, isn't it? There's some positive things here. We haven't opened the door yet, but it's not looking so hot, is it? Let's get rid of this one for now. We already know where that weekly will be. We'll put this one down here. Put a weekly right here. And we're going to start looking at the day. And there's something else to be seen in here. Let's remember where, see these two white lines right here? Now that we're on a daily basis, I want you to just look at the, no, you can't go up there, right? No, we want to be up here. No, fuck you, we're not going up there. This is, I believe this is 666, right? No, we're going up there. Nope, we're not going up there, bro. So a lot of like, no, 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 no. This is Poop Island. You see it? And then we got another Poop Island up here. Here's your Poop Island, Poop Island. Whoa, no, bro, wrong way, right? Down here. No, wrong way, bro. We're going up here and they're panicking again. We haven't lost this yet, have we? I mean, that is important to know. We have not lost this level. This is a very, like, this is considered like pounding out a bottom. But it might not be bottom, right? If we lose this at any point, it's party time, isn't it? We're at least going to go back to this last Poop Island. That's this zone right here. That's where these buyers were, right? Here, here, here. So we'll go down here and see if these guys are legitimate or not, right? And if it was early year, I would say, this is great. It's fine. Let's bring it down. We got all year to get this up here, knock all this out, but this is end of the year. So in my view, and my rules, I don't like the low. And if I see another new low, it's risk off. We're not at risk off yet. Not even this morning. But just by what I went over you just now, this is your marked low right here. You can do this on any time frame, like a 1 minute time frame. If we begin to break down here and make this new low, and these numbers are already telling you, if these two are broken, you're going to see a new low, and we're going to go risk off and start blasting. We're not there yet. I'm not scared. I just want you to know that, this isn't good right here, right? So we got to wear out. We have to wear out the seller. And I told you on Friday that these are not bears. These are not bears. These are not your doomers. These are your bulls. These are your buyers. Your buyers are scared. And they're de-risking in the background. You could already see it in some of the other indexes. And there was some hiding going on last week, rotation going on in the market. Some hiding in other sectors like the Dow. It's quality, hiding in indexes, hiding in the Dow, hiding in like UPS and FedEx looked great last week. Apple looked great last week. Apple was holding the market up, right? Last week. Google, or was it Google this morning, I think, was holding the market up this morning as well. So it's not like we're in de-risking yet. We're not in risk off yet, or we're in de-risking and hiding. So you can already see the behavior of the buyer is like hiding around the market, trying to find a home. We're not in risk off yet, but you can see it, right? You can see it in spec growth. Everyone's de-risked from spec growth. generally. Spec growth, when you see de-risking consistently week in, week out in spec growth, it's giving you a warning shot. And then you see rotation into quality stocks and into indexes. And then you've got another group of people that are just pure panic. And those aren't your doomers and your bears and the market should crash and all that kind of stuff. Those are buyers that just want off the merry-go-round. Get me off, man. Get me out of crypto and spec growth, and get me out of anything in the market. I don't want anything to do with this. They're not necessarily bearish. They just don't want the risk anymore. They want off the ride. I think the mantra would be, when I described to my wife this morning, I said, someone that's accumulated all year long, right? They've accumulated all year long. They made a bunch of money. Not your day trader or your I don't know, your FOMO bull or your I don't want to say poor trader, but someone that's got a small account. It means you have less than $1 million. That means you don't buy the S&P 500 or the Qs, or you like your retirement funds, all that kind of stuff. Those people don't care. They're very patient. They'll just say, I don't care where we are. I don't care where we go. I don't care if we trade 720. I'll see you in the spring. I'm going to go pay my taxes. I'm going to take my money and run. I'm going to do tax loss harvesting on my losses, and I'm going to go have a Christmas party or something. I'm going to go on vacation. I'll be back in the springtime. So we got to deal with those fucking people. We have to deal with those specific people. And if we lose these numbers over here, and you're left to be the bag holder. So it was interesting. I had some little, I have a shelving unit. It's like a built-in, and I've got a bunch of trinkets on it. And I was showing my wife this morning. I said, I grabbed one, and I placed it on a table, and I said, I started here in February. And then I had some more in March, and then I had some more in April and May and June and July and August, and September. I got a big print in October. So I got all the bottles lined up on this table, and this is this morning. And I said, okay, so it's the end of the year. Look how rich I am. I'm going to start to put my bottles over here, 1 and 2 and 3, and I'm like, that doesn't mean we don't get new all-time highs, but it's end of the year. But all of a sudden, all my bottles are over there, and I say to her, there's someone on the other side of that trade. It's probably a retailer that doesn't have as much money as me, and they're hoping that I'm going to come in and help them buy. And that's how you get divergence in velocity, in momentum. That guy that's down there saying we're going to go to all-time highs might be a retailer. The one retailer's got a few bottles. Another retailer's got a few bottles. Another bunch of retailers have a few bottles, but they don't have all the bottles. I handed those out to those people at the end of the year. And when it comes time to buy more of those bottles, they might not have the money to buy them. They become the bag holder. There's no one there that wants their bottles. We need that guy or that gal that has the billions or trillions to buy. And if they're not coming back until the spring, then we got a problem, right? The retailer becomes the bag holder. So that leads me back to the original statement. We have to wear out those sellers before we can go up. And they're not quite panicking. And I want to call them like panicked buyers, but they're not. They just had a good year. They're not necessarily bearish or whatever. They just want a nice low in the spring to come back to. I think that's the easiest way to describe this. So the first thing we're going to do here is run the day. We can show this one right here. We'll mark this as a D here. It's not like the top's not in. It's not confirmed yet. The top's in. We're not risk off yet. I want you to know that we're not risk off. Here's the day right here. We can write this one here. I think I'm going to erase this one in a minute, but we'll do this with the D here too. Make this one yellow. And we're going to go to one that really matters here, which is the 4-hour. Let's look and see what we got going on here. This is the one right here. This is the one that I care about right here. And I care about, this is new. I care about this one right here. We're going to make this one red. And this one's new. This was higher before it actually came down today with this cell right here. So this cell right here, this 4 was actually higher. It was up here. Now it's lower. So the sellers were higher. They were here. They're now right here. And they're kind of getting aggressive and even more panicky now. Where they were panicking up here last week, just bring it up so I can get out. They're now actually lower. So we're going to get some pretty serious selling here, even if we're going higher. They freaked out more than likely this morning. This low right here, probably, or this failure up here. And then with it, the hourly trade in here, the selling again, it's going to beget selling. It creates even more panic to get out. So where they were here on Friday, they're now right here. And we haven't even encountered these people yet. We've not encountered them. Kind of weird, right? It's not kind of weird. So we're going to snap one more line in here. This is an important line. So we're going to do this one right here. And we're going to make this one a 4. This will tell us if we can go higher or not to encounter the next batch of buyers that are freaked out. There is also these two up here. There's one right here that matters. 681.05, but in truth, it's probably up here. 680. That's the 683 one. When I keep saying we need to get above this to actually be going to 700 or 720 or whatever. This is like a key level right here. This is the one that was bothering me on Friday. 683.87. We'll just note that here. I want to write that cap. We'll write that one cap up there. So we're going to go to a 1 hour here. Just going to check this out together. Remember, we still haven't given up this white line. We haven't given up this new low yet. So we're intact right now. On an hourly basis, we're still fighting on the hourly velocity turning around. Make this one green. This is the great bull hope right here. And we got this 4 hour. We need to get above. So right now we need to get above 673.95 to begin to want to attack this 678, 679, 682. And there's something else that's going on here. It doesn't show up on this for some reason. It doesn't show up well on this. I don't know why it doesn't show up well on this, but it kind of shows up well. It's right here. This is Friday at 1500, right? I want to show you this one right here. This one is what matters. That one right there. I want to show you. This is where the secret is. This is where the sell was this morning at 4 a.m. Right there. And it goes all the way up here. This is exactly where your panicins are. So this is where we broke support. Right? You can kind of see it right here. See it right there. And this is where everybody actually freaked out. No, I think Pravorsky said over the weekend he said this was systematic. He said, I don't know if I can show this to you. The Rubner that said it, or was it Or was it Rubner that said it? Rubner, or it was Rubner, or I don't know, it was Rubner or Pravorsky said this was systematic to the downside here. And I said, okay, I'll give you that systematic, but this triggered retailers to be panicking. This down move right here. This triggered your all year long accumulator to say, nope, I'm fearful. And you can actually see that when we came into Friday at 1500 or middle of the day, they did the same thing. They unloaded. They unloaded again at 1600. And they unloaded at 4 a.m. You see them? These are all panic selling in here. Down here, right? Back up again. Down here. Just unloading panicking. You can just see it right there. And not only that, right? No matter where we go from here up, this is all their unload places right here. And until we get up here, right? Can you say, yeah, everything's fine. We're out of here. We're going up here. You kind of see that hourly trigger right there. Now, what becomes the problem in here? Where is the real problem in here? There's so many places for them to try to sell, right? Yeah, everybody starts giving up. And then you also have in here, you've got Vixpiration on Wednesday. There's Vixie 9 a.m. And look where that lines up. Right in there. Isn't that fascinating? And then you get monthly expo right here. That's monthly expo. And where is Gamma currently? Remember all those early buyers, all those retailers when we were walking out of the market in October? We walked out of the market in October in the beginning of, or the last 2 or 3 days of October, in the beginning of September. All the FOMOers bought this one right here. This is 7,000. This is the pin for the month of November. So dealers have crushed the hopes and dreams of all these people. Here is what you need to get to 7,000 up here. And here's month end over here. Remember all these options, not all of them. A bunch of these are out in January and stuff, but this is month end. Oh, wait a minute. I'm sorry. I'm in the wrong screen here. So you got the 7th. Did I show you guys the yeah, I showed you guys the gamma, right? Yep. So you got Max Payne over here. You got Max Payne over here, right? You got systematic selling us down. Systematic selling us down here, shaking out retailers. This is where you shake out the retailer. And you have more panic behavior from retailers in here, more panic behavior from retailers in here, more panic behavior from retailers in here. Everybody looking lower. We have yet to give any of this up. So we're not in risk off yet. And the major gamma bar into month end is right here. So are we looking lower yet? Are you looking lower yet? I wouldn't be. I'm still long, by the way. I'm not looking lower yet. Have we given this up yet? Have we coughed up 663.36 or 666.21? No. Just say no. Should you be scared? Yeah. Should you not trust the bulls? I wouldn't trust them. They want to sell. The bulls being the retail bulls, right? So they want to sell. Where do retail bulls want to buy? They want to buy this, right? Where else do retail bulls want to buy? They want to buy this too, right? So we're getting off the bus. They want to buy that. We go all the way down here. Pain trade. Come back up here. Who wanted to buy there? We had two groups, right? Let's go back and look at it. We're exiting. We go have a good time at Halloween. Everyone loads up on 7,000 Cs. They get taken down to the woodshed. We come back up here. And more panicins, right? And I tell them, watch out, you're going to get squeezed. We take long here. We come in here and I tell you, close your longs. On Wednesday, close your longs. We're supposed to go up here. Right? That looks good, doesn't it? 1, 2, new high. And what do they do again? Flush us down. I think it was Pavorsky, or I don't know what his name is. Pavorsky and Rubner. They said, well, this was systematics. We got more panic here. Get out, get out, get out, get out, get out, get out, get out. And in fact, there's this going on, isn't there, right there? We haven't sold this down yet. We haven't gone risk off yet. So let's look at that really quick. You got this one right in here. Yeah, right there. Oh my God, world's gonna end. Get me out of this, bro. Get me out of this, bro. Oh my God, world's gonna end. Still holding on. It's like the meme, like old school, where the guy's drinking bourbon or smoking a cigarette and he's doing the rings. He's like, I haven't given up just yet here. Who is that guy? I don't think these are retailers. I think these are the systematics. These are the banks. These are the institutions. These are the non-panicins. Now we got to deal with the retailers up here. And we got to deal with people that are going to freak out. You know, they're going to sell this down, freak out. They're going to sell this down, freak out. We're going to sell this down. Or maybe they jump on board. FOMOers, right? They get excited again. They drive us up. And they drive us up to 700. And they get all excited again. The panicins. we start looking for what? Start looking for this maybe into a Vixpiration. Fight for that all-time high up here, right? Now you've got the we're crashing crowd. Gets excited. They buy, they get dumped on. They're like, don't worry, we're coming back, bro. Buy again. So you buy again. Or they do. They make some money here, but they get sold into again. Go up here. Now they're really excited. And then they get shat on again, right? Get some unemployment data. Oh my God, we're going to crash again. We're back up here again, believe it or not. So the way is still higher here. Not lower, it's higher. Way is still higher. We have not given up a new low here or here. We have not violated anything that would send us. This isn't open. Way is higher. And where is the most dangerous point in this? It's the same place that I told you on Friday or Saturday, I think. I even gave the number on Twitter, I think. It's right in here. Just got to get up there. Just got to trade that 683.87. Just the tip. They go up just literally 1 penny. Remember I told you we got to close the week green. Showed you the three weekly candles. So if I'm saying this and we go back to a week, what does this candle need to look like this week? Kind of big, right? How would you feel if this week wound up like that? So if this turned into the weekly candle, or the end of the month candle, I should say. We got 2 more weeks left, I guess. You'd have this one right here, right? You'd have this one. And you close the month just like this. Oh, hold on. That'd be vicious, wouldn't it? On a weekly basis here. Blood, right? This was probably red too. Started out the 3rd week red. Here's your first candle. Here's your second candle right there. You see it? So this candle here, red. This one starts out red. But it winds up going what? Big green. You see the green, right? Green wick, green wick. And then your next week is right here, right? Looks kind of familiar, doesn't it? Over here. This is one of the best months. Right? December is even bigger, right? So from now until this one right here. That's all we have to get to right there is Wednesday, Thursday, Friday. 1600. I'll watch this one for sure. Don't worry about any of this. Don't have to worry about anything about that. Here's the Monday low. 11 a.m. Look at that, buying it again. This is all we need to work with right here. Just need to know where the sellers are. Cap's magic number. And today's Monday. And the only thing we have to worry about is where do we close Friday out. That's it right there. Just need this to be a nice big fat green week. I think do I got that right? Let's just check this again. Look at last week's green or red candle. It's right here. I'll even bring it up a little bit, right? Oh, no, there's that. Just need to get above this one right here. This is Friday. Right there. That's it. Looks like accumulation to me here. Looks like accumulation to me here. Looks like accumulation. Looks like accumulation. And it looks like a lot of fucking panickers in here. I'm going to assume that the seller is thinking this is like a inverse head and shoulders here. Then we're going to crash. I don't see that. I don't see no crash in here unless we break through these two numbers right here. So I'm bullish. Go back over here. I'm still long, by the way, if you want to know. We got to clean up this stuff up here. We got these guys over here, panicins. I'll just write this in. Hold on. We'll just change all this here. Not change, but we got panicking. I don't know what 9 means. We got end of the year sellers. Call them end of the year sellers. Bulls, though. These are bulls. So you can't trust these bulls. They're going to tell you that they're not scared. Look here. Clone. You got a panicking right here. You got a panicking right there. You got a panicking right there. I kid you not. They're everywhere. You got one other one over here. I'm getting rid of Cap because I'm not a panicking. But I know that they're here. Right there. They're right in there. You can see them. They're right in here. They freaked out. They freaked out here. They freaked out here. They freaked out right here. And they're going to do the same thing. Here's your next stack of panicins right here. Remember, we just need to pop over this. It's Monday, 12 o'clock. We're going up from here, by the way, if you don't know. Hang tight 1 second here, guys. Sorry about that, guys. Monday, 1800. Today, 679 is the target. Oof. This is panic in one. One way or another, I'm gonna find you. I'm gonna get you one way or another. I'm gonna find you. I'm gonna get you. That's a pretty big move right there. One way or another, I'm gonna find you. I'm gonna get you one way or another. I'm gonna find you. I'm gonna get you one way or another. 12:30. 1 o'clock. So much fear. Smell it. I haven't even checked the fear index yet. There's 12:30. There is 2 p.m. We have a date with that guy right there. That's where our date is, right there. One way or another, I'm gonna find you. I'm gonna get you. And here they go right here. See him? He's like, bro, get out of the market right now. It's gonna crash, going down. We're just gonna write panicins for the rest of the week. Next 2 weeks. Panicins. Try to identify them and mute them until we get done with this. Be like, write yourself a note. Unblock him right at top. One way or another. What's that? Why does that look so funky in color? What is max green? So don't panic. Top line is this. Number one, do not panic. We are at the end of the year. We're not starting new positions. Number two, even though there's de-risking going on, it doesn't mean the top is in. Number three, I've said this to you before, you'll see systematics get long for a print in February. They are not having, their horizon is not today. Their horizon is normally like February. It's not a holiday rally. It's not December 31st. In recent history, it's normally like mid-January, possibly into March 31st. You can clearly see that retailers are in full fucking panic mode. Now, can they bring us down to where we go risk off? Yeah, they can trigger CTAs, vol control gang to chase trend. Retailers have been very good at predicting the market too. They've made a lot of money, and they've done very well outrunning hedge funds, banks, everybody else. So they can be right. But have they sold us down low enough yet to create panic? or to create de-risking or risk off? The answer is no, they have not. If you want those numbers, I gave them to you here. Write these down. I'm not lying here. Like literally, this is pretty easy to do. Like get a pen and paper out, get your notepad out, get your, Google or whatever the fuck it is, Windows, notepad or whatever, and write these down. 666.22 on SPY. This matters for the entire market. I don't give a fuck if you're trading IWM, trading DIA, trading SPX, trading ES. You can use these same numbers across all those indexes. IWM. IWM's a fucking redheaded stepchild of the stock market, but I'm sure you can overlay all of these against 5 different indexes and say, okay, if we go underneath this number, this magic number, not your stock, but the indexes. So 66622, 66336. If you see below that low, and if you see the low broken here, right, we'll go risk off. Remember that you don't need to call the top. You need to confirm the top. So I'll say a few things. You don't need to call the top. You just need to confirm a top. You need to know where the risk off line is. I just gave it to you. It's 66622 and 663.36. Now, in my view, we need to go up as fast as possible. You have until Friday. You don't want to get another red week. We want to get a nice big green candle this week, closing high. I'm going to predict for you right now that when we close on Friday, it's going to be fucking vertical. And next week's candle should be vertical as well. We'll go into the beginning of the month for December, and you're going to get the fascinating thing is the first time in history we've had data not given to us. First time in history. This is the first time. And what's fascinating about it to me is that they packaged it blatantly in 2 ways. They gave you the economy is strong data all at once, and now they're going to give you the economy is bad data all at once. And, when good news is bad news is the data that says the economy is good. I know that's an oxymoron. It's hard for you to understand, but the market should go down because of where it's at if you get that data. When we get the data that says the economy is bad, there could be a knee-jerk reaction down maybe the first week of December, but then you're going to hear the discussion and talk about how we have to cut in December because the unemployment rate's so bad. And you can already see the CME is like, no, man, we're going to get cuts. That would happen last week because everyone's betting on the economy being great. We're not getting cuts. And they're like, whoa, we haven't got out the other data yet. And no one cared. So the CME is being run over. And even though the CME is being run over, they already know. You actually can look at the 1 year, the 6 month, and the 3 month. That shit's ready to rip faces off right now. That's the real like future Fed funds rate prediction. You want to be watching those things like the 1 year, the 3 month, the 6 month. Those fucking things are like we're getting cuts. They're like poised to rip faces off right now. So until we lose this number down here, we're not risk off. And to the point from last week, if you're a bull or a buyer, you want to see that number I said to you get taken out. That's that 683.87. I think it's also like 685. We want to poke our heads up. You see this one over here? This one right here. So this is what I want to see. I want to see that tick taken out right there. I'm going to show it to you up here. I'll just write panicking. Or so here's what cap. I'll just write cap again. I deleted it, but I want to see like cap wants to see this number. See this. So you got this one right here. I don't really care about this one because I know if we hit this one, I already know that if we hit this one, it's an auto right there. I don't care how deep it could go all the way down here. It don't matter. It's going up there. So I just need to see this one number right here, 683.87. And that will take out 685. But we got to deal with panicins the entire fucking way. they're going to be buying puts all along the way. They're going to be selling equities all along the way. They will help us on the top. They will propel us at the last moment to rip higher. They'll jump on board and be screaming at you in the Discord and on FinTwit and all these other places saying, bro, we're going to the moon. And the only other thing you got to know here is we're close to risk off. So when a bull tells you that, the bottom is in and we're not going down there, just don't believe him. It's that simple. The doomers can be right. If we go down here and hit this, the doomers can be right. We can start blasting down. Okay, so just keep all that stuff in mind. I know it's a lot to keep in. I know it's a lot to take in and soak up and all that kind of stuff. But the way is higher. Put this right here for you. I'm still long here. I haven't sold nothing. I'm still want to see West Moon and still have a bunch of calls on for the end of the year, and got still have calls on for today. So stay with me. We'll see where we are at the end of the day. My projection for end of the day today into the close by like 6 or 8 p.m. is 678.31. It probably isn't for you, but it is for me. We're going to run over these panicins here in just a minute. It's going to take a little bit. Let me see if I can find out if that was, I don't know if it was Rubner or Pervortsky. Let me see if I can find it really quick. And there's some other things I got to talk to you guys about. I think Gamma Labs this morning said nothing changed. I haven't seen anything change. Either. I haven't seen anything change in the Gamma. I haven't seen anything change in, I see a lot of put buying. That's outstanding. I like seeing it. Put buying is almost near neutral with call buying at this point. So let me see if I can show you guys this really quick. We're now putting in a bottom so you can see it. I'll mute all this for, do I need to mute this? I don't know if I do. That's enough, right? You see that? They're panicking. Look at it. They're all buying puts now. They're all hedging. These were not here last week. None of this was here. This was all gone. This was all super low. A whole bunch of this was like, none of this was here. Like, none of that was there. None of this was here. Oh, hold on. It's reset. It's getting new data right now, but just so you can see, they're loading the fuck up on puts right now. They're all freaked out. And I would not be freaked out. We murdered the 7,000. This is going to be a magnet into the end of the month. OPEX in a month, maybe even the first week of December, first few days. Thanksgiving trade, go vertical while everybody else is eating turkey legs and stuffing. I'll be here with you, by the way. The way is higher. They're all hedged out, and you're going to be the one that's going to be rich while they're waiting for their crash over Thanksgiving. So we're going up, just so you know. Still going up. And we'll deal with risk off when we are. So still no risk off. Doggone it, if you're out there. If you're ready, the bottom is in. You want to know. He was asking me on Friday. I was like, we get a little bit more to deal with. There is one more problem here that I need to say to you, which would just be that 685 is going to be some cause for concern. We should get a pretty violent sell up there. That's up here. Nope, not up there. Hold on, let me go back here. If you're out there, doggone it. Whenever we get up here to this 685, I would expect a reaction. I would expect an attempt to sell this. I just need to see that wick up here. We could have some kind of like degrossing in here, potentially, right? Like this is an inflection point. So you could either buy here, doggone it, or you could wait for this one over here. Either or will give you a good entry into end of year. If you're out there, my brother, you could also buy this if you want. This is fine. Or even this low this morning actually works. It's a pretty good low right here. I like that low. Price target from here, 680, 683.87. Buy the hourly trigger and the half hour if you want, or if you want to wait or whatever. It'd really suck if we just ground sideways and then it's just like vertical 1 or 2 days. I was thinking of that too. The worst I could see here, outside of like going risk off, the worst I could see would be something where we do like an inverse of expiration, where it's like one straight vertical day. That's Wednesday. That's Tuesday AM into Wednesday AM. It's like 9 a.m. tomorrow, 9 a.m. On Wednesday. Not a down Vix. When you guys hear like Vixpiration is down, I think it's going to be an inverse for this month. I think it's if they like drag us sideways, drag our ass across the concrete. I think you're going to get a Vixpiration that's the inverse. So just a warning to you: if you ever hear me say like Vixpiration, watch out to the downside. I'm going to tell you it's the inverse this time. More than likely, up. If we're down here, it's more than likely upside. Either tomorrow at 9 a.m. or Wednesday at 9 a.m. We're selling at willing buyers at the current fair market price. I don't. I actually don't. I'm not on the downside yet. I can be. That's where the whole like don't trust buyer or don't trust the buyers here thing is. If we get down to those we get down below 666, whatever that is, and 662, then I'll get scared. Like that. That's my fear trigger right there. Those two white lines are my fear trigger. Otherwise, I think it's just smoke and mirrors. I think we're going up. I still think we're printing. I mean, otherwise, I would say this. Let me write this out. Write this out so I'm on record. So you don't. Well, I don't want to change. I don't want you to think that I'm going to like hindsight or anything. Hold on here. I'll type it out so that it's clear as day. Um, the way is higher to. Hold on here. What did I say? 683.87. $683.87. Make sure I got this right. I just want to top line it so there's no like question here. Way is higher to 683.87. From there, panic sellers will step in. But if we are one tick higher, and 683.87, they will not matter. only go risk off below if we trade 666.22 and 663.36. Here for you. Let's leave these guys right here. We as higher to 68387. From there, panic sellers will step in, but if we are one tick higher than 688, they will not matter. The pullback should be bought. Which is a whole nother process. Of selling STR. That would be back tests of the half an hour trigger, hourly trigger. Give me that big green ball right there. We already know we're going higher. Whole nother STR. As for where we go, after 68387, after we'll deal with that later. Let's put that out there right now. Way is higher to 68387 from the panic. From there, panic sellers will step in, but if we are one tick higher than 6387, they will not matter. The pullback will be bought. I only go risk off. We trade 666.22, 66637, which is a whole nother process of sell the rip. I think that's all I got for that stuff. There are some caveats. There are no lower highs. You don't have a lower high. That's false. So lower highs? No, we haven't put in a lower high yet. We have not put in a lower high yet. The lower high is right here. For us to put in a lower high, it's right here. That's the lower high. There is no lower high yet. There's no lower high yet. The trade today is right here. This is between 1600 and 1800 today. I think it's at that's right here. You'll see it at 6 p.m. tonight, in my view. I suspect you'll see it at 6 p.m. Mark it on your calendar today, and you'll see the higher high at the close today at like 6 p.m. That's gonna be your new high from Friday. So you have your Friday high, your Monday high. One minute charts don't matter. When you start counting, you're not counting like a 1 minute on the first low we got underneath the daily trigger. You're not allowed to count like a 1 minute chart. It's like a daily or an hourly 4 hour. Usually it happens within like a 1 hour low, 4 hour low, and a daily low on the same low. It's like right in there. I need to see the day close. I would need to see the day close below Friday's high. That's where I would need to see it for a new daily low. As a matter of fact, the Friday high was right here. Friday high is 672.69. You just go above this 673 and we got a new high. New daily high. We close just right here. We don't actually have to go that high. We just have to go like right here at the end of the day. And there would be your new daily high and new high. There's no daily low anymore. You guys are mixing things up. It's okay. I do this. It happens to me all the time. We just literally need to be above, I think, this one right here. This is where the panicans come in right here. I think it's 673. I'll find out the exact high. Hold on. Ready? I haven't looked. Where's Spy? Look, a Spy. Yahoo had it. I used to check this shit every day. Investing.com has it here. Today's the 17th. We have to be above 675.66. So right here. 4 p.m. Or 6 p.m. Where's 1600? 14th. Where's the high? 675.66. Right here. Right there. This is 4 p.m. Right there. Weird how they all just kind of line up. Huh? Right there. We'll go right up there. See it. Right here. I checked on ES and on SPX and SPY. We had one low. You can see it right here. So just for my rules, do you see the tick right here? That's your low. That's a higher low, isn't it? You see it? That's your low underneath the daily trigger. You did not get a new low on Friday. Oh, it's all right. I'll explain it to you guys. I gotcha. Not mad or anything. You had a high here on Friday. This is your marked bottom. You've already hit a high in pre-market over here. And this is higher than your Friday high. I don't personally count pre-market. So of course I would like to see that high today, which is right here. The official SPY close was up here. I'm assuming that we ran up or something in the overnight. There's missing information in here. I'm assuming we got a after hours high or something in here on Friday. So we should go like right up here. That's it. Just this one right here. And also see that this lines up where the sellers are right here. Up here. Hit that one. Sell us back down again. Remember that we come into Vixpiration this week on Tuesday. I think my thought here is that this all goes back to I think that all of this goes back to, listen closely here. I think all of this goes back to, so when we took the money and ran in October, right? That was like October 27th or something. I went to New York City and I was like, yeah, I'm risk off here and I want to see the market like pull back the first week or two of November. And I didn't know where it would stop. I think I wrote like a bunch of lines on the brief. And then I was like, this is Captain Jim James used call lot down there. And we went down there, didn't we? Created some panic, built out some puts and some hedging. We ripped faces off again, right? Then they tried to trap in sellers on Tuesday, then buyers on Wednesday. And it was like manipulation time. So if we started the month off with everyone looking higher and then we like blooded everything, I think that in the, like, I think we're in the inverse of all of this right now. So that 7,000 they'll attempt to print as we get closer to Vixpiration end of month. We didn't hit our targets coming into Vixpiration. How do I explain this simply? I'm trying to make this simple. Just get a black screen. Beginning of the month, right? New month. We came into a high. Starting the month, though, in a low. I know that there's a lot of people out there that are like, well, bro, we didn't get up high enough, and we're going to jackknife down into Vixpiration and OPEX. That's the second leg down. So, like, bulls need to get above this 85 for that reason to keep the market alive, in my view. So you got, sorry, shouldn't have done that. Hold on here. Now you get these this new month, but they were rolling them in here like this. So my thesis here is that if I was a dealer, all these early buyers in here, because they came in early, they got shanked down here. So you come back up and you hit it at the end of this month. We're kind of like in an inverse trade right now. It's like inverse up. I don't know how to explain it better, but shit, I did it again. I was just trying to go back here. Now there are inflection points in here Get rid of this one. There are inflection points in here, like if this was the 685, this is the ATH. This is month end. So if like you got early FOMO bulls in the early October, if I was a dealer week, we had a massive green bar on 700, 7,000 on SPX. So if I was a dealer, I'd shank the fuck out of this. And then you got like systematic selling down, create a bunch of fear. And then when you're running this back up, you're going to trigger all these like FOMO or now fear. Like all the FOMO is up here. Then they race down here and they get scared. Like they're all FOMO'd up. They're all scared. So if a systematic can send this up, that would trigger the FOMO again. Gets brought back down again. They're like, oh, we'll buy it again. They actually drive up for the systematics that are already long, and then the systematics jump back off again. You get more FOMO again. This gets brought back down. There's your cup and handle right here, and then you launch up to the 700. That would be like month end, Thanksgiving week. Then you come back for the first week, you get the bad data, and then you get the we're gonna price in a cut for the end of December. That's the path that I see for bulls. So I would need to see. My point here is that I would need to see that like rejection up. This is where we are right here. I would need to see that rejection on that 685. Start getting bared up, and even then, I would still need to see the those two little white lines broken still, because they could still fail this, come up here, hit it, and then even go up there and hit this and hit this. There's two main places here. There's the 685 stuff, 684, 683, 87, what the fuck that is, and there's this one down here. So unless I see this broken or I see this fail, this break, the way is still higher, believe it or not. Even with all the drama and all the craziness and all that kind of stuff. So like, and here's where it gets fucked up. Like, here's where it kind of gets fucked up. Here's where it kind of gets fucked up. If we're not violating the two lows at 666 and 663, and we don't break above the 685, I wonder if it takes like Vixpiration, OPEX, month end, Thanksgiving, like everybody's away and it just goes vertical. Like we just drag sideways. And then all of a sudden it's like 30 points on the board one day, 30 points on the board during Thanksgiving, 30 points on the board end of month. Like they have all this time to get to 700. So there's that too. That's the one negative to all of this is like negative without being risk off is we could just drag our asses. When we melt up, it's like that. You're like sideways, 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 big move on a Friday, sideways, 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 big move on a holiday up. And meanwhile, everyone's panicking, you know? So I'm still on up. Up to the right, up and to the right. It's real to you. I would say get long. I think unless we reject the 685 or break that low, I would say get long. I think we said this last week too. Call spreads are your friend. Or trend days would be your friend for 0 dates, but I think call spreads are your friend or owning the market. Whenever we do the melt ups, you can get eaten alive with the sideways corrections. They'll eat you alive. And then you get like 1 day of moving higher. So I think that would be the only other thing I would comment on that. Would be end of year melt ups are kind of funky. And even when we're melting up on those 1 day, oftentimes they're moving price, but the 0 dates aren't paying. Futures are good for it. Futures are good for it. SPX is good for it for those days. They don't like SPY is really bad. Like straight SPY can be really bad to and the worst part of it is that you're like trained into if you're gonna get long on a 0 day during melt ups, you have to stay long all day long. You can't get in and out, in and out, in and out, in and out. They'll like put price where it needs to go and not pay those 0 dates. So you kind of like get long at 9:30, stay long all day long, and you just don't get out on those trend days. It like fucks with your like your trading mentality or something. All right, so we're gonna check gamma right now, and I'm gonna work on that. It's down here. I'm gonna work on that and post it in the Discord. Way is still higher. I'm just gonna look at gamma, make sure nothing has changed today. We are, by the way, hammering out. Last week this was extremely. If you look bottom right hand side, last week we had extremely small put wall and small put wall. I'm gonna look at these put walls and see if anything is improved or if nothing is improved, to try to prove my thesis still here. So the first thing I'm gonna look at here is where right now is the gamma flip, and we're gonna take a look at that. And it's a little bit messy again. I'll just take a peek here. So we got some changes here. Gamma flip has moved down a little bit. I think that changed last week though. I think we had like this map is like half right and half wrong. We improved gamma. The gamma flip came down last week, and then we also improved the this is no longer weak support in gamma flip. It was weak support last week. We knew that. Ready? We did look at this same time together. Let's look at this together. So we had some changes in gamma last week. This is now the gamma flip. Firmly there, I think. Just check it. 670.50, 670.40. Check it real quick. Yeah, it's a little bit lower. 6790. Yeah, this is a tough one. There's a little bit of gamma at 677.40. 740. I don't know if I'd call that gamma flip. Let's check this really quick. 6790. It's kind of tough. 6735. 6740. That's a tough one. I'd say it's right here. Check this really quick. Yeah, I'd say 6740 is gamma flip. And it's weak at that. Move this down. 6700 is a nice, this one's gone. This one's gone. This is a good put wall here. Not a bad one. It's actually pretty good. It's a put wall that's firming up. So we'll just say put wall right here. SPX gamma. This is the last vestige of the gamma flip. The gamma flip's kind of funky right now. It's like 674, 6740 to 6755. It's more like a band. Right in here. This is the gamma flip. This is your first put wall right here. Your bottom is 66650. This is bottom of the put market. And then we go into deep negative gamma. I'll show you that too. Okay, so that's green. This is a put wall. Has improved. Believe it or not. Make this a 1 hour so you can see it. Now under here is bad. Let's write bad. Deep negative gamma. Now we need to be aware of this right here. This is where vol control funds, CTAs, and dealers become sellers. This is where vol control funds, CTAs, and dealers become sellers. As of right now, dealers are supportive in here. Dealers will only chase up here. They'll become more, or they'll buy pullbacks in here, believe it or not. They will actually support you going up here, believe it or not, too. But right now, on any lows, they'll buy all this with you. They're the only group here helping you right now. CTAs are not buyers or sellers. They're just hanging out. They're not doing anything. Pullbacks should be bought from dealers. If you go up here, of course, dealers will sell into outside of cash market hours. Here's the gamma flip right here. Bulls are in safety above 6,800. So this is not gamma support would turn into right here. Above here. So a little bit better way to look at this. So like dealers are buy here, dealers are buy here. There's your flip. You get up here, this is your 683, 685, and the market becomes very supportive in here. We know too something else that's bad here too, right? If we sell that 683.50 and don't hold this gamma support, we're going down, right? So you got to break this. That's the two white lines on SPY. Or reject this up here. And if we reject that, that's bad news. We're going to get down the depths of hell. If we get real money selling in here, you know, that's bad news, right? In both cases, right? If we can't hold that up there at 683, 685, we're going downtown. So there's no real selling to do here yet. There's just accumulate, accumulate. Accumulate, buy, accumulate, buy. And we either have a date to fail this or we begin to fail this. What else do we know about this? 6,700, right? 6650. Let's look at where we'll go if we fail this. If we get these guys on sell side, right? That's when you don't trust buyers. Don't trust your local bull. We come down here and start partying. Where are the targets? It's gonna get nasty. 6600 would be first stop. That would be the first stop, but this would definitely, I don't think this is the bottom personally, but I think it's going to get real nasty in here. I'm just going to make that yellow. Not going to make that green as supportive. Make that yellow. And I would be targeting 6,500 to start. Right down there. And I would call this a put speed bump. And this is your first put wall right here. Yep, right in there. Let me just check here. And there are more lows down there. 6,400 is the next one right here. The next wall is at 6,400. Then I'd be looking for this one to get tagged, personally. Consider buying a dip down here. Let me show you how that would look. You hit this one right here. You'd likely blast down right here. Come back up. And then you'd hit this one right here and more than likely rip right through it. Just so you can see it. Some just like this. Reject this all the way down. And I don't think you stop right here. I think it's going to be like, I would eat you alive down here if I was on sell side. Just remember, if you hit this right here, moment you hit this, moment you break through 6650, I would be looking for like wham straight through, and maybe start thinking about a recovery. Pretty big move here. This is 6650. That's 250 points all the way down, somewhere in there. It would be vicious, and I'd be more afraid of risk-offish behavior in the end of the year. And my target down here is not 6,400. I don't know how long it would take, but my target would likely be 560. We would switch to risk off. So now you're putting around down here, then you get a new low. Daily trigger follows us down. Get into the end of the year. There's February, March. Before you know it, we're April, May. Somewhere down in there. So, from my view, this is kind of where we're at. We are right here, right? Can't be giving this up down here. This deep negative gamma over here, be very concerned with that. Very, very concerned. You have a lot of time though. I think we break this, start blooding this shit. Lots of time to jump on that trade. My target's 5,600 on that. Just so you know. Break that. That's my target. I think it'll take a while to get there, but I think for it being end of year, you'd like sell Christmas. You get a holiday rally maybe in from like Christmas to like middle of January, and then we'd really get nasty. So just I'll post this for you right now in the Discord, just so you have this. I'd consider buying this for a holiday rally. Ready? Show it to you again. Ready? If you come down here, make that new low down there, right? Whatever that is right there. I would be targeting like this for Christmas. 6,400. You get your holiday rally in here. Your hourly trigger would come down this way. Your daily trigger would come over here. And then we'd be off into, you know, like February, April, May lows or something. My target down there is pretty vicious. It's right in here. 5801. And it would be violent. Like you'd hit this and then you'd be like wham. It wouldn't be in February, it'd be in like March or April. Somewhere down here. It would look something like this. Something like that. Take that whole trade. There's a lot of people that think that we'll bounce off this. A lot of people that think we're going to bounce off that right there. I don't think so. And they're going to take all your fucking stops, and then we're going to come back up, and we'll then it'll be something like this. Something like that. They take all your stops down here. I would. You might get the bounce in here, and then they'll flush you out, and then you'd be able to get out of it. 560 target, or 560 on SPY, which I think is, see it right here? It is right there. Close that gap right there. It would be nasty. Brutal. But we're not there yet, so you just want to watch this very closely here. I'm going to watch this right here. These two put walls right here. Should say Maybe for a holiday rally. Ultimately into lots of buyers also believe bottom in that scenario is between 64 and 6,500. In my view, maybe for a holiday rally, but I think ultimately into spring we possibly go down into 5,600. Remember, we still have not triggered risk off. Still have not triggered risk off. Still have not triggered risk off. You have to remember that too. We have not triggered risk off. You need a hug? I think we'll sell it together. I think I'll get as bearish as maybe you're not, or more bearish than you are. Just pain. Hold on here. We go back to the main screen. Oh, did I posted that for you? I am. I'm long right now. I'm still long right now. I'm not a seller here at all. Bring this back up for you here. Oh, they're selling it back down again. There's so much pain here. What's going on with the pain, boys? Here's risk off right here. This is risk off. If you were to come down here and hit these two right here, woo, then it's party time downside. Look at how close it is. Are you all freaking out right now? Everybody panic mode? Hold on, I'm going to put another trade on here. Hold on. My wife asked me this morning, she was panicking too, and I said, "Why are you panicking?" I said, "You remind me of traders." I'm serious, I said that. It's like, stop panicking. It was like, you make me lose all my money. What did I say? For 675? I am long here, by the way, and I'm adding more calls right now. Give me 1 second here, real quick. I got to take this call. Hold on. Thank you. Sorry, had to, you, you can just take the call, please. I appreciate it. I'm still here, guys. I'm just dealing with a phone call really quick. Swear to God, that thing is. Is the door open or no? Check 1, 2. Screen for him. You can see that. Right there for him. One way or another, I'm gonna get you. I'm gonna get you one way or another. I put this risk off in here just to give the if we start blasting down there at any point, people will freak the fuck out down there. I just want to make sure my screen was not the old sailor guy. What is a 6 month doing though? 3 month and 6 month. Yield. That doesn't look good at all. says, I'm going to read this to you. The weekend 60 seconds. The fog from federal government shutdown is set to lift this week. This will bring some much needed clarity over where the pulse of the U.S. economy sits and what the Fed's next step could be. In this sense, the September employment report will be released on Thursday at 8:30 a.m. That's not good with we have on Tuesday, Wednesday is I wish we got that employment report today because then we would get the Vixpiration upside move. Just check VIX really quick. Maybe front running Vixpiration, maybe. Looks like they want to front run Vixpiration to the debt and send us down for that. VIX looks like shit too. VIX 9-day looks like shit. VIX 30-day looks like shit. Hang tight, I'm reading this here, guys. This guy's got Paul Mackles explaining why this matters. This looks more like trying to fucking price in Vixpiration in a downward slice. Like this won't matter on Thursday. Like rip the 6-month yield up and then dump it on Thursday. It'd be fascinating to see if we switch from I'm reading two reports right now where they're two different reports where they're saying the economy is outstanding. No cuts. I wonder if that'll be the story on Thursday. I'm finding it fucking pretty hard to believe. And this guy goes on this guy writes like a 40-page article as to why. It smells like dog shit to me. Usually don't need to write 40 pages for that. Oh, hold on here. Come on, man. Turn that shit on. Well, I can see the roll down. This looks like a trade, though, not like a. It doesn't look like a. It doesn't look like. It doesn't look real to me. It looks like fake. Hold on 1 second here. One quick second here, guys. I want to say it doesn't look material to me. It looks like a scam. So what I'm looking at here is I'm reading this. Reading these two articles here in the background, and they're trying to make the case. You know how you have like the real Fed funds rate and then like the gambling Fed funds rate? It's like this one guy here is talking about like everything's cloudy, maybes, coulda, shouldas, and all that kind of stuff. And I'm like, well, if we were gonna get down there and trade these two white lines, that would make it material. We're gonna go risk off on the market. But I'm almost gonna. I mean, not guaranteed, but I'm gonna put like a 70% chance that on Thursday you'll see that argument switch from no cuts to cuts. So it's like fake news. I don't call it fake news, but it's kind of fake news. Hold on here. I gotta drink some water. Yeah, there's more of that too. Like I saw in our inflation, I saw they're pushing a narrative that inflation's ripping. I'm like reading these two stories right now, and it's like the two stories. I'm reading two stories on another screen here. Like one of them is like a fucking 500 word essay on Twitter on a private account that I pay for. And then the other one is from BBG. And I'm just looking at this stuff and I'm like, I know on Thursday so you have like the Fed funds rate, right? And there's like the gambling side of it, and then there's the actual. And so you have traders that'll come in and like gamble on whether we're going to cut or not, or raise or go neutral. And like when I was listening to the Fed speakers last week, I listened closely to them, and they were lying to the data. They were lying. Usually they just cover, but like last week they were actively telling lies. I don't know why they were doing that, but I found it unusual. They don't normally do that. And so I'm reading one article here, and I'm reading another one right here. Like I'll read one of them to you. Here it says, and I know, excuse me here. So I know a lot about the data right now. I think I do. I think I'm informed on the data. So you got like September. We got some data we have, some data we don't, and some data we actually won't ever get again. But we're gonna expect that the data for unemployment worsen in September, October, and November. No, we also know that inflation is rising. It's not going crazy, but we did hit our 2% target, and in like we have our economic data is strong right now. Unemployment data does look like shit, but no, the reason I brought up the soda thing was because I went to our inflation, and that subreddit is like one of the most garbage subreddits on Reddit, and they had their top post all weekend was the cost of soda is through the roof. It's trending right now. Um, so they're either asking one of two things. They're either asking for disinflation, which hasn't happened since the turn of the century, not 2000, but like 1900. It's kind of like the cost of a hamburger costing 5 cents. For a hamburger to be 5 cents and for that kind of disinflation, you're talking about a depression. You're basically asking for a depression. But I just don't like you can get a depression. It's just not going to be something that you're going to wish for. No one wishes for that. And the economic conditions aren't pointing towards that either, in any way, shape, or form. So, like, you have to understand there's always like a balance of this stuff. Like, you've got like, are we in disinflation? No. Are wages keeping up with inflation? Yes. Right. And do we have mass unemployment? That's the bigger question. So, I know the unemployment rate was dog shit in September. During the shutdown, that's going to look worse. Not on private payrolls will look bad, but the government payrolls are going to look terrible, right? Because it closed the government down. And then for November payrolls, it should look really ugly because when you close the government down, you have a knock-on effect with government spending too. That affects private payrolls. So let me explain it to you a better way. So we're going to assume that unemployment is terrible. But I'm reading this guy's story here, and he's pushing a narrative. I'll read it to you. He said, the fog from the U.S. federal government shutdown is set to lift this week. This will bring some much-needed clarity over where the pulse of the U.S. economy is, or economy sits, and what the Fed's next step could be. So I find that bizarre. Could bring clarity on where the next Fed step could be. I'm like, what do you mean clarity? We know for sure that payrolls are down. We know that there's higher unemployment. We know that we had a shutdown, so the government payrolls are going to be dog shit. We also know that the shutdown was long enough to impact private payrolls. That would be like November, December reads. Unemployment matters more than anything else. Excuse me. GDP matters, but GDP can even out once the shutdowns lifts were lifted. So, like a squiggle in a GDP is not going to matter. What does matter is unemployment. Inflation matters if payrolls don't keep up, or not. If wages don't keep up with inflation. So there's like something that it's not quite circular, but you can have a high inflation if you pay people more. I haven't seen that happen yet, where like people aren't getting paid or anything. But I find it odd that this guy's writing this. I find it odd that he writes the data. He wrote September report, which will be released on Thursday. No. This will bring some much needed clarity where the pulse of the economy is. That sounds suspect to me. It sounds like a downside trade, but it doesn't sound like it's material. If the unemployment rate is higher, and if we're going to get dog shit reports that get more dog shit into the end of the year, that means we're going to get cuts. There's no two questions about it. So if the argument is that like today we're not getting any cuts, the economy is strong, and they're arguing that unemployment should be fine, maybe? I don't know. Then you switch to a Thursday report on September payrolls, which says the economy or the unemployment situation is not good, so we're going to get some cuts. This looks more like a, like fake bullshit to get down, to squeeze. But at the same time, if you go down here and trigger this stuff, you're going to trigger mad selling down here. You'll freak everybody out. The market will go risk off regardless. He says the data is backward looking but remains very relevant. After all, it captures the period when the FOMC resumed its easing cycle and follows the time. You know what else is fascinating too is that QT ends on December 1st. So that would be the way to start the QE cycle. This looks like manufactured bullshit to kick in QE, or the end of QT. So I guess this whole argument today, would that whole entire argument switch or flip on Thursday or the 1st of December? No cuts. And then all of a sudden, 2 weeks later, we need to cut and start a QE cycle. The data is backward looking, but remains very relevant. After all, it captures the period when the FOMC resumed. I guess my question is, or just like further would be, if materially, all the data says no cuts, we should go down and stay down, right? That story would persist past the 1st of December, right? That would persist past Thursday, would persist past the 1st of December? Or would that story go away or shift? That's my bigger question. It says that this data is backward looking, but remains very relevant. This guy goes on for talks forever about this. Is like the data is backward looking, but remains very relevant. After all, it captures the period when the FOMC resumed its easing cycle and follows the time when Chair Powell sounded dovish at Jackson Hole about U.S. labor market conditions. He recently said, "What do you do if you're driving in the fog? You slow down, but markets will be on their toes as to whether Powell and team may need to speed up or not." This will be the first main data test for the broad USD since the shutdown began in the absence of the BLS figures recently. Other employment indicator surveys, ADP, suggested an ongoing cooling, but not at an alarming rate. This Thursday's readings are likely to reinforce this thinking. So is this just an operation to get price lower? Or is it an operation to crash the markets until Thursday or the 1st of December? I guess is the bigger question. Coming into the first trigger right now, 66655. Not good. Probably see it here. 66622. SPY or SPX trading down to 6682. Turn this off. Doesn't matter. It doesn't matter. Hold on here. This Thursday's readings likely reinforce thinking all the market is already sitting close to being on the fence, i.e., roughly 10 BPS of cuts priced in for December. FOMC, this report could tilt the odds more in favor of another cut, put the USD on the back foot. It also will be a busy week with FOMC speakers, including Williams, Waller. And we had a bunch of speakers this morning. And last week they were extremely hawkish. And I was like, man, they're hawkish and they're giving us reasons that are not fact. The letter will be helpful in understanding not only how divided the FOMC is, but also how much fog its members see and what the impact of the shutdown will be. Well, we may pay close but this is all like squiggly line shit. While we pay close attention to the lifting of the political and economic fog in the U.S., we do not have the same feeling about the GBP and UK. The idea that Reeves will not proceed with income tax increases in the 26 budget came as a surprise. The quick rise in gilt yields did not coincide with a weaker GBP, which is interesting. This could imply some positioning constraints. This may also means we may need to brace for more market-moving headlines over the fiscal outlook in the coming week. No, like I guess my bigger question is the argument here, like if it's a real argument, it would stick around past the next couple weeks. So the argument today would be relevant in 2 weeks. It wouldn't shift completely in 2 weeks, because then that just makes this an operation to get a lower price. But if it does matter, that would be the top of the market. That would be it. It would be done. That's the implication. Is if the thesis for today into Thursday and December 1st is legit, you would go risk off. You wouldn't come back from it either. If the argument is just like a psyop, like running headlines to get a better price, then this should reverse and like crank. In terms of UK data, the highlights will be the CPI readings on Wednesday, public sector borrowing figures on Friday. GBP OIS market is basically primed for another MPC cut of 25 BPS on the 18th of December. It would need to take very soft inflation readings to price in faster easing cycle, undermine GBP further. This is a high bar. Friday's borrowing numbers will be ultimately a reminder of the state of the UK's finances. Rounding things off, there will be speeches by the MPC's Mann, Pill, and Dinger in the coming days. That's not good right there. That's bad. This is really bad right here. No bueno here. Well, what I'm doing now is I'm downloading some of this stuff because I want to see if this is still the argument on, Friday or Thursday for the unemployment figures, and on the 1st of December I want to revisit it. Or does the argument fully switch to panic mode easing cycle? Like, is this bullshit or is it legit? Is it bullshit for a trade lower, or is it true panic risk off? I want to revisit this Friday and probably the 1st. You're going to see some rampant selling soon here, guys. This is going to trigger rampant selling. Not quite yet, but soon. You'll see it below this 663.36. You're going to see risk off. You'll see liquidation here. Not yet. We're not there yet. But this will trigger liquidation, guaranteed. This will liquidate market. It won't go straight down, but it'll trigger it. You'll see every sector liquidate after this. Maybe that's what they're forcing, liquidation. But I guess my question is more: is this just pain or is it liquidation? %80 of economists expect a December rate cut. Citadel disagrees. Yeah, but a Citadel just in shorts. You can't trust this shit either. That's likely a trade and not. Just read this really quick. I'll read this to you now too. Saying now you got to take this with a grain of salt here. If we're in a trade to press, right? You'll hear shit like this. Says 80% of economists expect a December rate cut. Here's why Citadel disagrees. Now, Citadel could be in just some short position or trying to get long as deep as possible. I want to know if this matters in a week. I said, what's up? Hey, I got to take care of something really quick. Sorry about that. I'm trying to book a hotel and I'm having problems booking a hotel. So I'm going to read this to you next. Where was I? 80% of economists expect a December rate cut, but here's why Citadel disagrees. Data sequencing and Fed speak make a cut hard to see. I agree with that. Like when I was listening to the Fed speakers last week, they were coming across really hard line, but they weren't using arguments that made sense to me. We continue to think the December FOMC will be on hold rate decision. Carefully mapping the sequence of economic data could hold edge regarding the December pricing and skews in a mildly hawkish direction. Fed speak has been uniformly hawkish. I agree, 100%. But why though? He's saying that they're telegraphing the no cut in December, pre-telegraphing it. We think the market is under-indexing to the comments from Jefferson and Barr as a signal for the views of Chair Powell. Our tracking of Fed votes suggests that there is a consensus to hold rates steady should the September employment report come in line with expectations. The September report is not going to be, it's going to be weaker, but not enough. And the October report is gone. The November report, they possibly can get the full November report. There's potential for it, but the December report should be on fire. Our tracking of the Fed votes suggests that there is a consensus to hold rates steady should the September employment report come in line with expectations. We also think there's a signal in the fact that the Fed is communicating ahead in this way ahead of the data deluge. Why not? Yeah, I don't know. See, this is where I disagree. You can come off as hawkish now and like talk the market down, and then come back with, oh my God, we need a rate cut, and then the market just goes vertical. 84 of 105 surveyed economists expect a cut at the December meeting. Not only that, even the CME thinks we're getting a cut. We think there's some edge in the data sequence. BLS will likely start by releasing the September employment report early next week. We're getting it, we think, on Thursday, believe it or not, this Thursday, not next week. We have expiration tomorrow, which is usually bad for the market. And we're not going higher right now. So even the upside expiration, like rip faces off instead, to print the 7,000, is not in sight for where we are at the moment. Reference week for the October employment report was 12th October during shutdown, so BLS would need to collect this is false too. No, this is false right here. Reference week for the October employment report was the 12th of October during the shutdown, so BLS would need to collect the data asking respondents to retroactively. Well, that's true. They would need to, but they're not going to. They can't. They'll never get that data, ever. To retroactively identify hiring employment from over a month prior. And they do put this in big bold. This potentially introduces material data quality concerns. Yeah, you'll never get that data. That data will never be clean, ever. October's data will never, ever be clean. You know why that is? Because you'd be asking for these, like, you'd have to roll that data. That data is like living. It like takes like months and then quarters and then years to make that data right or whole. So you would never really truly have like clean data. And no one would respond with that data like caveats over the years. You just dump it. The household survey is most exposed to this. Agreed. White House has indicated that both the October CPI and employment reports will not be released, but Kevin Hassett clarified that the October jobs figures would likely be released with the U rates not released. I disagree with that. It wouldn't be whole data. Good? Thank you. Our base case is that it will be difficult to collect the November data on time. I agree with that too. Now, this I agree with. It would be difficult to collect the November data on time if the October report is processed and released ahead of the November report, meaning the BLS may need to delay the report from the 5th of December until after the FOMC. Oh, okay. I see what their point is here. And then the FOMC blackout starts on the 29th of November. I see what their argument is, at least. Our base case is that it would be difficult to collect the November data on time if the October report is processed. I see the argument, at least, what they're trying to say. Our base case is that it would be difficult to collect the November data on time if the October report is processed and released ahead of the November report, meaning the BLS may need to delay the report from the 5th of December until after the FOMC. And then, of course, there'd be a blackout at that point on the 29th of November. September data looks okay. October data looks likely delayed, lower quality. Our tracking suggests the September employment report looks broadly solid. I agree. Not broadly solid. It looks in line. We see risks that the September report beats consistent estimate preview to follow. The October data was expected to be the weak spot in which the U rate was expected to, the unemployment rate was expected to jump 0.3 to 0.5% due to the furloughing of government workers. Yeah, but there'll be a knock-on effect in payrolls in the December report. It doesn't say that here. Yeah, hold on here. You wouldn't dodge it, though. Shutdown. The October NFP report is likely to be weak, but we think the expectation of a negative headline number is well flagged to the market, agreed, and the Fed due to the negative 125,000 Doge layoffs being backdated from earlier in the year. Data quality concerns will be in focus, too. The lack of an October CPI combined with benign initial claims is implied by aggregating the state-level data means the data release sequence leans mildly hawkish in terms of implications for the December meeting. Equals less likely to cut. That's not good. I do get what they're saying here. This sounds like a fucking fight inside the Fed. What time is it right now? What's going on here? We're parked on Gamma right now. Gamma pin is at 670. Check vol control funds here. Looks like vol control funds are buying here. Same with CTAs. We're also at the sweep level for the 4-hour candle here from Friday. SPY down 1% right now. $668.74. If we touch this number right here, we'd go to 668 and then straight down right here. We're like that close. Like we touch this right here, be up and straight down. Oof. And there is nothing here. What's going on here? This isn't good right here. Close that shade, please. I've got it mapped out down here. We have to cross this line. If we do that, this is where the path would be right here. lower there. Thank you. I appreciate it. Half hour trigger crossing the hourly trigger on SPX. Hourly trigger now crossing daily trigger SPX. ES liquidation would be 6684.25. Because I think we're already there. I think we already hit it. Oh no, I missed one more down below here. Scratch that. I missed I think I might have missed the last candle here. This. I got that right. Overnight ES extremely bearish right now. 80% of SPX just taken as well. And just a note here that ES broke through 80%, implies there'll be a rejection in the overnight, and we'll start selling. So whatever buying comes in over the overnight here, it's not going to matter. We're not quite there yet, but we'll be there in a minute here. So this will recover here. Just a warning to you that this will recover. And we will sell cash market tomorrow straight down to the depths of hell. We still have to hit this target here, but we're not quite there yet. You'll see us go up in the overnight, but it's not going to matter. We just have to hit this one target here, and then we will. We'll hit this one, and then they'll buy this into the close. We're going to go straight to the depths of hell. Goodbye, SPY, baby. Woo! If we can hit this last number here, target on SPY is going to be like 652 to check, 654, 652, but more than likely we'll trade much lower. If we can just if we wrap this up today or tomorrow, we're gonna see 652 will be first target. Second target will be 638. Fuck. 640. I'll give a target of 640, 642, somewhere in there. By the time the weekly gets there on Friday. God damn. They haven't hit it yet, but if they can hit this, even if they don't hit this today, they'll hit it tomorrow. This will sell. This will rip into the overnight and then come right back down and hit it. We've already we've swept every 4-hour candle, so. $642 is the target. That's 250 points lower, I think, right? Yeah, it's 250 points lower from here. 25 on SPY, but on SPX will be 250 points lower. God damn. And if this doesn't do the nail, tomorrow's open should do it. If we can drop down another $1 or so. About $1. If we can drop $1, we can, like, they buy this shit up and we sell it back down. And the other thing too is this could also trigger risk off from Asia. You're gonna need to watch Asia and London. If they don't buy this, we could start blasting down overnight. It just needs to like float up from 6 to 9. Like dealers should pick it up at 6, and then at 9 o'clock if no one buys it, it should be like 678, and then we'll start blasting down. You can see another one right here. There's another one. We're gonna go risk off mode here. And ultimately it leads, I'm looking at it right now, it ultimately leads to 560. We're going to drop 1,000 points over time. This won't be done. From here, from this mark right here, you'll see 560. You won't see another all-time high either. You just got to touch it right here. Just need to like go down just a little bit more. I don't know if that counts out all-time highs, but 1,000-point drop coming in. And it's going to take till spring, but you'll see 1,000-point drawdown between now and spring. I'm pretty confident in that. And I think, and you ready for this? This is where it gets crazy. We could trade 600 or 700 and still we'll trade 560. At this point, we'll still trade 5,600. Just all you gotta do is touch this, and you will see 560 by springtime. Watch this one right here. Nine minutes left until we come into the hour here. Goodbye, SPY, baby. Sell the rip. Holy shit. Oh, no, wait a minute. We didn't hit SPX yet. A little bit more. Down more. Go down a little bit more. A little bit more. Pound it down. A little bit more. Woo. And that's all that was needed right there. Well, I think we missed SPX. We missed SPX by a penny, but I don't think it matters. I think by morning you figure by morning, they got to take out all three, SPX, SPY, and ES. ES, though, already took out most of their 4-hour candle. So ES what we should do is go up at some point from like now to like 6 or 9 p.m. This will trigger rampant selling, though, and Asia won't buy this, I don't think. I don't think Asia will buy it. I don't think London will buy it. And then we'll start blasting. On the table right now, 642. We'll hit 656 first, then we'll hit 656, then 642. They'll try to accumulate it and bring it back up to trade. They're going to attempt to trade 700, but it doesn't matter because you'll still sell every half-hour trigger, hourly trigger, daily trigger, just like you would if we were in buy the dip mode. So we're now in sell the rip mode. So you're going to sell every half-hour trigger, every hourly trigger, and every daily trigger from this point forward. There's potential for a holiday rally to 700, but it ain't going to matter. Even if you go up there, it's just for liquidity to go down again. I'm going to tell you that right now, I think we'll trade 560 by April. May, April, somewhere in there. And we just took out SPX. It ain't going to matter. We're sell the rip from this point forward, likely in the spring. So every time you go up to those triggers or even a testing of the ATH or anything, it ain't going to matter. Top is in, guaranteed. Even if we were to trade 700, it's kind of still the top for me. So we're risk off. This is all risk off, so we're done. That was it. Goodbye, bull market. We'll see you in the spring, right? That's it, baby. Woo. God damn. We'll still go higher. Don't freak out and like sell everything here. There's way better places to sell this down. If you're looking for like end of the world puts or something, don't do that. Don't do like June puts right here or April puts. You can do short dated stuff, but you want to catch a high for those. You want to catch like the daily trigger for that, which is right now at 673. So anything in and around there would be a good place. 680s or 90s might help. We'll probably take another trip up to the scene of the crime. But that right here is the trigger. We're done. This market is done. Goodbye. I mean, we'll go up for you get your holiday trade in. It ain't gonna matter. When we come into springtime, we're going down. It's gonna be a shit show in the spring. Holy shit! Bye bye. Risk off, baby. That daily trigger is gonna run. It's gonna turn upside down. You're gonna see some. I'm gonna go check it right now on the daily. Yeah, we're already going negative on the daily velocity now. It's gonna be like February, March, and April. Just a word of warning to you out there. It's gonna be like February, April, March, and April. They're gonna fucking destroy this. As a matter of fact, just a warning to you. This is like, if you want to know exactly where we are February 26th or 7th, February 30th, somewhere in there. Actually, I'll give you an exact date. We are somewhere in February 26th. Probably, yeah, somewhere in the 26th, 27th of February. Bye-bye, SPY. An actual correction is going to start here. This is all that was needed right here. And what this does is what this says is that you're going to go back to the origination of the trade, which is we're going to go back to June 23rd. This means the way is not higher, the way is lower. Now, I don't know how long it takes to get there. Well, first thing we have to do is take out. Yeah, I don't care. They can fuck right off. We got to go down first and check like 652, 653. If we can break through that, if we can take out like 653, we'll go higher again, and then we'll take out 630, 640, 642. Then we'll trade 616-ish. If we can break through that, then we can trade 560. There's a lot of places we have to still sell, but if you wanted like the trigger for trading 5600, this is it right here. That's all you needed. You now have negative momentum on the side of sellers, which is what you need. You need momentum to flip to sell side, which is what we just did, I think. Unless I'm missing something here. Well, you'll hear some bulls say it's like, you'll hear some bulls say something like, well, we haven't taken out 661, 66 yet, but it doesn't matter. It only matters from our last low, which was on Friday the 14th. So it's not going to matter. We just gotta. All we have to do is like we'll go up on the overnight and then blast through 661 like Tuesday, and then we can start blasting. We took out 663.37. So we just need like, we want to watch between now and 6 and 9 p.m. If Asia freaks out and London freaks out, we can back in the U.S. market and negative gamma. We can go down and sweep the low from the 7th on Friday. And if we can sweep that low, we'll bounce again higher, trade 78, and then we'll go down and fuck with 53. If we can break through 52.93, we can then trade 40. 42 is pretty much in stone right now, I would think. And once you start getting the Momo, like the key here is if we can get the Momo going negative, there'll be nothing stopping it. So just need a couple more back tests in here, and that'll be it. 642 has like a 70% chance of trading. That helps. No, sorry. Let me put it a different way. 656 has not 653, but 656 has about a 70% chance of trading right now, and about a 40% chance of trading, which is a very high percentage, believe it or not. It's not 5, it's not 15. We have an extremely high chance of trading 42. If we can get under 42, 40, 45, 642 or 640, then we can start opening doors to 616, somewhere in there. For this, just a warning to you, this is the worst. I think I said this on Friday. This is the worst price action I've seen since the roll in mid-February. I said that to you on Friday. I'm going to tell you right now that this is guaranteed as bad as the last week of February. What happened was we just come in and it would be blasting down. So take this as a warning. How they would set it up would be we'd come up here and then wait for we could do this. So I want to issue a warning here, okay? We're now in sell the rip. So what that means is we can sell the 5-minute trigger, we can sell the 1-minute trigger, we can sell the half an hour, the hour, or the daily. So from this point forward, right, you want to be looking for pullbacks to the half an hour trigger, hourly, and auto sell this stuff unless proven wrong. Now you can be proven wrong. We can go back up to no more risk off. But if whenever we're up here, we're changing from buy the dip to sell the rip. So you're not going to believe at this point any buyer. You're going to look at this like, if I flip this upside down, let's say we did this, you would still be trying to sell this to the downside. Now we got to talk about this really quick. Hold on, give me one quick second here. I want to talk to you guys about something here. Okay, we got to talk about going risk off here. I want to discuss this with you because we haven't talked about it in a while. It's been a little while. Sorry for my raspy voice. I'm a little dehydrated, or not. My throat's still fucked up from last week. Okay, I'm going to flip this upside down for a minute. I want to discuss this with you. If you're a bull, pay close attention. Bulls are going to think that if we trade it up here, that we're back risk on again. So if you see the daily trigger right here, see the daily trigger, they're going to think, oh, we broke the daily trigger, everything's okay. That's not true. When you look at the market from the perspective of a buy the dipper, they would normally be looking for, hold on here. A buy the dipper would be looking for like a move up here, and they would auto buy this to go up. You're going to be looking for, like, you have to change your mentality. So how do I describe this better? You're going to expect that to fail. You're going to expect this to fail. You're going to expect that to fail. And you're going to expect that to fail and this to fail, even if you squeeze up. So some of you will be looking for like a bounce and then up. I want you to switch to, even if we go up here, you're going to expect that to fail. If you see this fail, you're going to then be looking for the back test to get short. Okay? And that's off every one of these triggers here. So where you're expecting these things to hold, even if you're underneath it, that's one rip through. So pretend this was on the opposite side. This is flipped upside down, right? You're going to expect continuation. Does that make sense? You're not going to expect like a recovery. I mean, it can, but this can all recover, but it's guilty until proven innocent. You're going to expect this to fail. So what does that mean for you? And it doesn't matter what we do here. It doesn't matter if we go all the way up here. You're going to expect that to fail, and you're going to get short in here and sell this fucking thing to the depths of hell. So you are now risk off. If conditions improve, you would need to see, I'm going to show you exactly what this would look like for conditions to improve. Conditions to improve would be something like this. There's your 85. You would need to see the new high right here, the high over 85. And you would want to see the bounce here. And you would also want to see, ready for this? Ready? One more high. Can't even get long. You have to be above 85. That's not what you're going to see. What you're going to see is selling. You're likely going to see something like this. And to the downside. So you're going to expect this to fail. And when it does, you're going to get short right here. And we're going to sell this thing all the way to the depths of hell down below. Now, you might get a holiday rally or something. There is potential here that they're just scamming us on the data and on the hawkish Fed and all that. And that would play out in here. But from this point forward, we are risk off. I'm risk off from this point. Unless something changes, you sell every back test. You sell every single back test. Does that make sense? I want you to realize that. So if we come up here, so we turn around, you're going to expect that to sell right there. Your next target in here is going to be 56 right down here. I'm going to draw it out for you right now so you can see it. Where is there? Just like that. And you don't actually have to come off short here. I mean, I would, but I'm going to expect that to sell. Hold on here. Right in there. One more test up here. Reload right here. You can even do it right there. 668 and less than a half. 25 right there. So we're going down here. We might get hockey stick saved in the close. But if we go like 6 p.m., right? Asia's gonna say no, and we're gonna bloodbath down into tomorrow. This is Monday, Tuesday, 9 a.m. We'll start with this one right here. 56 on tap. We'll just draw it in on here. Let's go and take out, go back to an hour. Take this one out first. That one right there. Hold on, we get rid of that. That one right there. Let's start with that one. Hold on. Right about there. This is our next trade right here. $668 maybe. Six right there. We'll hit this one right here. Some panic overnight. It's Monday, Tuesday, 4 a.m. right there. This is actually, where's 1600? Where's 1600 on Tuesday right here. So we'll panic overnight, wake up tomorrow morning down here, blast down here. And then we will take out, so we took that one out there. 653, 652. This will be Thursday or Friday. Like to see that whole fucking thing gone right there. That's what I want to see right there. I want to see 44 by Friday, but we'll take it slow. There's one right there. This will certainly catch up a bid right here. 5, 3. It'll be just like this. Buy this up, wake up in the morning, down, Tuesday. This will be like Wednesday, fuck around in here. I think that's right. Right up there. Up, down, down, down. We're going to erase all this quick. I think that, get this right. Yeah, that's where it's going, right down here. And this shit here is going to be capitulation down here. This is where the real blood is right here. Let me just check this here. Just like that. Yep, just like this. Break down. Up, down. Try to recover. Just like this. Recover into the overnight. Wake up tomorrow. Down, down. Fight for your life. And then here's where the liquidation is, down in here. 642. Lots of room here to sell. This is OpEx. We'll come back up here, but I don't know. There's 70 right there. And then we're going down, baby. There's your 16. Okay, expectations. Ready? Expectations into the close and into tomorrow. Just want to show you this. I want to see us trade 660 down here. And then rotor root down in here below 650, 750. Right there. This should also be that tick right there. Yep, right here. So you can see that. We'll take this one out right here. Then we'll start working on the 50s and the 40s right here. We gotta get through this one right here. We gotta break through this one so that we can take that one out and take this one out. And just so you note here, this is the initiation. Watch this real close with me. This is rate cuts. You ready? There's rate cuts right there, right? Here you go. Right there. That's the rate cut trade. September 17th. And that puts us right here. And if we're going to the 17th rate cut, this is the buyers that's saved for rate cuts. So here's your rate cut trade right here. September 17th, rate cuts. These guys right here bought these rate cuts. So we're going to now go back and test these guys. If the rate cut trade is dead, we don't know. We'll know on Thursday. Okay? This might take until Thursday. We're supposed to get data here on Thursday. We'll go 1600 right there. But this rate cut trade in here, if there's no rate cut in December, there's your September 17th cut. That would mean we take all of this out right here. So like 42 will come fast. Just so you know, this could all come really fast in here. And we got to remember something else. Here's your September 17th rate cut buyers. Here's the dip buyers for the 17th. If these guys are not here, we trade somewhere in here. It's like a block of buyers right here. That's how you get your 642. So if you find out there's no rate cuts in December, we'll come back up and rock this down here. There's your Merry Christmas right there. No rate cut. Woo! This is the start of before rate cuts right here. If at any point we're down here and they start talking about rate cuts again, hey, rate cuts back on, everything's horrible, unemployment's horrible, they'll lift it up and we'll start that whole trade again. Dangle the rate cut sausage in your face. That's a done deal right there. I think we trade 640. I think we're going to hit the 642. But there's your 652 right there. This is from September 17th. No rate cuts. Now, I don't know if this is real or not because a lot of the talk right now is just scaring markets, telling you no rate cuts. But you want to be looking at these two places. You want to be looking back at this one right here. This is no rate cuts. This is the start of rate cuts. So if you have no rate cuts, that means we break through this, right? Find real buyers that are not rate cut buyers. Now, I can't tell if this is real or not yet, with the rate cut or not. But the one thing I'm going to warn you from here into the close is that I'm going to leave this here just like this. So on Thursday, you get rate cut data or you get unemployment data. That's the target right there. Now, one thing to let you know here is that you want to be selling. I'm going to give you a 4-hour here too. Yep, that's how we're at. We're on this one right here. You might get a high side trade to you might get a high side trade to 667.97. If we don't, it's still the way is still lower. Let me show you this. I want to warn you of this in the overnight here as quickly as I can, okay? So I'll give you till 4 a.m. to go up. Dealers will offer this up to Asia. But remember, we're in the inverse now. So if dealers offer this up to Asia, it's like maybe 6 p.m. that dealers will run it up. But like come 9 p.m., you'll see Asia try to sell it. You'll see London try to sell it. And they're going to try to sell. They're going to turn sell side here. Downside targets on open tomorrow. Maybe tomorrow, Wednesday, 661, 658, and also 652, 653.81. We'll see if this bounces or if it breaks through. If we can get it down to like 651 and change, that would be great. I would actually like 650, but maybe a wick off there would be nice. Risk off, baby. Watch out for the squeeze into the close here. Just give you this here. Here's 1600. Expect dealers to buy here. And just watch this one right here. This is the only one you need to watch right here. Could take during the day. I'll give you that one. I'll give you this one here. Risk off. Unless conditions improve. And I got to change some of this here. Hold on. Remember that we can be much more squeezy in here. Now, if we're not risk off, remember something. So just watch this closely here, okay? This one's yellow. This one's red. So just watch this closely here, okay? You are selling all of this or all of this. Be patient if you're a seller. Don't go chasing holes or anything. You can, but just note that the best trades on both bull and buy and sell side are always retracements to your triggers, and you're going to expect some selling. So if you see any retracements to the hourly or the half an hour or the daily trigger, we're gonna in that. I'm trying to explain that. I don't know how to explain this, but you'll see a move higher here. You're not going to buy that. You're not going to buy that back test. You're going to wait for the failure. So let me just draw it in for this. So it would look like this. Let me just do this in a 4. Okay. So just like the inverse, what you would be looking for would be 1, 2, 3, right? If you see that break down below, you'd be right here, and you take the trade lower. Does that make sense? So it's just the inverse. You don't have to just sell whatever you want. You just wait for price to go higher. It'll mark a bottom, but on the upside. The moment you see that break there, bulls will try to buy this briefly, and you're just sell side to the downside. So that's the trade right now. Something like that, if that makes any sense to you. Until conditions where morale improves. I want to redraw this here. I want to mark these levels, though. Make this cleaner. I want to give him to at least there, right? We'll start with this one right here. We'll start with this one. That's what we're working with. And we're going to get a bloodbath in here. You can see it already. 1, 2, 3, 4, and then whoop. Bulls unable to pull it out. Told way is lower. Bulls would need to get above the 83. Let me just go back to this weekly really quick. Is that on the 4? It's even lower now. Bulls would need to go. Let me just check this really quick. Right here. here. Around up here, sell that all down. I mean, do you even have to go that high or no? 78. I want to see that fucking thing plunge. Down up here to 78 and then down. C6 is the target right here, right? And 78 to go down. Pain, pain, pain. Let's go like this first. Um, This is Monday, 1600. Best thing you can do. Let me just check one more thing here, guys. There goes the 4-hour candle right there. Right fucking here. You gotta like these 4-hour candles here. We are straight the fuck up, risk off. Hang tight, guys. So make sure I don't fuck this up here. Hold on. See it right there? So this one here, up, down, up, down. There's your W. So you're breaking above that. And here's your failure right here. There's your double correction right there, upside. Double correction. Hold on a second here. It's going to go just like this. Okay, so ready? I can't guarantee this is gonna be like this, but this is all I can tell you right now. So we need to do some violating in here. I can guarantee it's gonna be not guarantee, but it's probably gonna be something like this, and then we'll root around in here and find out what if we're getting cuts or not. This could go really far down here. It could go just right here, but we'll start with this one right here. Let's get rid of. Let me just draw this in here. We're gonna start with this one right here. This could be Friday close. Just note, I'm gonna put this before. I'm gonna do it real nice, just real nice and clean, like right here. Yeah, plunge it down there, right there. That's the expectation. Now, there is some trickiness in this, like if we're able to get down here, there should be like a choke in here and then a plunge. And that's like a whole. Now I don't know if this is a mark, like this is your bottom upside down. You'd have your A, and then we start fucking moving. But we have a big chance of moving here to the downside. So we'll start with this one right here. Just note that this is the start of a whole nother set of waves, either 1, 2, 3, 4 or 1, 2, 3, 4, 5. So now up here, risk off unless we regain 683, 75 or 74. As of right now, I'm going to teach you how to sell this. So if you don't already, some of you already know how to do this, but what you want to do is this. Like we go 1, 2, and 3. If you see the roll starting here, like coming onto this hourly trigger, and you start, seeing this shit, we get the new low. All you got to do is like start selling this like right here. If we break above, you get the new high, you're all excited. The hourly trigger comes down. You're thinking, oh yeah, we're out of the woods. So you come up here. This is a correction for bulls. 1, 2, 3, 4. If this begins to fail, start stalling or whatever, we're getting short in here. We're going to run that fucker straight down to the depths of hell. It's in bulls' hands right now, but this does not look good for bulls at all. We could easily sell this right here too. So you got this low, the new low. This is all meant to go down. It's party time. I think I'm being generous giving bulls this right here. I think that this is a dotted line, so we're switching to solid lines down. Just note here that I got to change this a little bit. Hold on, I got to change this. That's a solid line. And this here is dotted line. And that there is a dotted line. Yep, just like that. So remember that we're on sell side now. So you're looking for the failure. You're looking for the failure. Price target 6. Ready for the price target? 656. 658.76 would be nice. 658.39, somewhere in here. We can go as far down as potentially 637.69. I think it's higher, but we can check it right now. This is Friday. I mean, that's fucking right there. There's 637.76 for some pain. There's some real pain down there, 623. I don't think we can get that deep. Maybe. I can't tell yet if this is going to go like 1, 2, 3, or 4. Excuse me. 1, 2, 3, right? Or sorry, 1, 2, 3. Yeah, just like that. And then like this would be breaking all of this, right? There's your poking your head out. There's potentially one more up here. Potentially could roll down here, poke our heads up, then we go up. There is a potential it would go up here, dribble down here, then there's your marked bottom or marked low. And then we start doing the thing. 1, 2, 3, and then wham. Start plunging down here. That's December 1st right there. There's a couple ways we could do this. Four minutes left. It's definitely party time to the downside. There's one other fear here, which is just one last thing to leave you with here, which is when we come into like 6 o'clock, you want to be watching futures right here. And you want to be watching 9 p.m. The reason I say that is yeah, I think dealers will pick you up to here, but we don't know if Asia will buy this in London. So watch out for the euro pours. Sometimes what you'll see is like US will buy it, Asia will like pick it up, and London will let it drift, and they'll step in here. Like it depends on how they're feeling. Not feeling, but they won't jump on this unless it begins to roll. Like Asia would want to see a new low over here, or a failure to get a pie, or this one right here. I think it matters if we start failing this. Be watching futures tonight, without a doubt. This is the outlook for right now. I'll give this to the bulls. I would be selling that right there. This is the one that I want to sell. 679.11. Some kind of a failure in here. Bring that down. some kind of a failure in here. What time is this right here? This is Tuesday at 1600. We could ramp up into Tuesday. Move this back a little bit. Tip your head up there. And this fucking guy right here. Tuesday, 4 o'clock close. On Tuesday. I'll give the buyers till 4 p.m. close. And then they'll fucking panic sell Tuesday or Wednesday, Thursday into Friday. If you can't get above this by Tuesday close at 4 p.m., they're going to plunge this shit. They'll still sell this fucker right into Friday close. Right there. Up, up, and down. There's where your bloodbath comes in too. OPEX, open, and down. Come back on Monday with a bloodbath. I'll have a brief out for you tonight outlining how to trade this. You know what's crazy too is this is Vixpiration here. Party time in here. We reject this into Vixpiration, man. Whole market's got gamma coming off. Dealers can fucking, people start buying puts up here. Whole bunch of gamma come. This might actually be a moment for bears here. If you're a bear, congrats. There'll be one more thing right here. Be something like this. A little bit higher. Bulls are going to think they're going to get their second bounce. You see that right there? So if you're a bull, right, I'm going to show you why we're risk off here. Under normal circumstances, a bull would be looking for this here, new high. And they would say, oh my God, I got the new high right here, right? So whatever that back test is going to be fine. And if they're underneath this area here, it won't be enough. It'll be a bull trap. You guys understand this? It's like normally a bull would be sitting here going, here's my high. Matter of fact, this is what they're going to think right here. Probably something like this. Probably going to look like this. They're going to think they're in the clear. There's two things to look at here. The first one, if you're a bull, you have to be looking at this one right here. So just keep an eye on this prior high. This, I don't care if this fails, or I do care if that fails, but I think even if you get the new high here and it pulls back, it's going to give you like a sense of false security. This one doesn't matter. This one does not matter. This could be used to set you up as a buyer. And then if you start stalling out here, and you're going to think that hourly is going to save you, but it's not. It'll come up like this. If you fail this here, any of this in here, you'll start pulling back, and bulls will think they're fine because they got the high here and the new high. And what'll happen is it'll boom, just like that. And then on like like that. Bears are jerking themselves off right now, probably. You want to if you're a bull, you need to pay attention to a few things here. You want to be watching the overnight for a rejection. There's potential of that happening. Will you need to chase this down if that happens? If not, if we begin to trade up, I would not trust a new high here. I would need to see it up here. Well, you can get a nice little rip here, but we are risk off unless we regain 683. Don't trust any new high in here. And I don't think you're going to do that. I think it's going to fail here. I think it's going to look like something like this. You're going to come up here, fail this. You're like, oh, that's fine. That's normal. We're going to fail that the first time anyways, Cap. Hourly trigger's going to come in. You're going to see that rip up here, and it's going to start stalling. If that shit starts stalling right there, slam the sell button. Risk off unless you regain 683.74. Seller's going to attempt to come in the overnight. They're going to attempt to come in here. They're going to try to come in there, and they're going to try to come in right there. If you want to know what risk on would look like at this point, I'm not going to put it on this chart to give bulls any hope, but I want to show you what that would look like. So if you're a bear, just lay off the market for the moment, but it would look like this. It would look like this with a new high. Actually, you might fail the first one. Be like 1, 2, 3. Yeah, you right there. 4 and then 5. Now, if you got that right, and the bears didn't see a new low or whatever, you would still want the corrective move first. And you would want to hammer that one out. If you like this, maybe you could start talking about it. Bulls, buyers, not in control anymore. It's a warning to you if you're a buyer or a bull. I don't care what you're reading. You would need to see a lot of work to put risk on. Also, note here too. If you're long and you don't want to get fucked up, your stepping off point is 678.89. You'll be given another chance up here to get out. More than likely, high probability that you'll be given a chance to get out. If you're long either here and you were caught in this, you'll be more than likely given a chance to get out. Now, even if this improves, just take it as a warning. Even if this improves, you don't want to step back on risk unless this back tests. New high comes back down. You're not losing a bunch. Remember, you're getting off the bus here. You're getting back on the bus over here. So it's not a lot. It's not a lot lost. What you don't want to happen is you're getting sent to the depths of hell. So buyers, bulls, you'll be more than likely given a chance to get off the bus here. And even if you're going to get it back on the bus, it's going to be somewhere in here. So you're not losing anything by going risk on again, back in favor. Sell side, it's all their game right now. This whole thing is sell side's game. They have a chance here to, not even a chance, it's in their court. Unless conditions improve, you expect sellers to step in. I do think you're going to get off the bus again. They're not going to like, I mean, if you're a buyer out there, don't fucking panic sell. They trapped you in here, and they're more than likely going to give you another chance to get out in here. You'll get a chance to get off the bus up here. And don't be like, Cap, we fixed the whole thing, man. Don't bother. We'll come right back and buy it again. Be responsible in here if you're a buyer. That's crazy. I expected us to go up today. I expected us to take, well, we took this out in pre-market. So my expectation for today was that we would go higher into the bell here. You'd get the actual cash market high. We'd come back tomorrow, back test all this, fill this area in right here. And then we'd start working on that into Tuesday and Wednesday. And we're up and out of here. Right now, this is not good. Not good right now. New low from Friday low. Also, nope, we didn't quite take this one out. I'd fucking like to see this. I'd like to see this fucker come down here tonight. I'd like to see us like come down here, take this shit out, then ramp up, I'd love for this low to be taken out over here. This one right here. I'd love to see like weakness in the overnight, some panic in the overnight, like wake up at 9 a.m., take this fucker out. I'd like to take all this shit out, to be honest with you, but I'd like to take all those fucks out, go back up there, then come down. I'd really like to see all, like, see these yellow lines and these two yellow lines, this red line right here. Oh man, this will be the fair of fucking God down here. This, like, see what that opens up down there? See what all this opens down here? It just opens up a bloodbath. And it brings in a whole bunch of other questions. Keep your eyes on this. Keep your eyes, if you're at home, keep your eyes on this one right here. That's the whole start of this trade right here. There it is right there. We're almost there too. You can see it right here. See this red line right here? If we could shank this fucker down here and at least like right there. Even just there. If you get below this, and get saucy. That number is 654.04. Oh, it's a little bit lower. I fucked it up. Hold on. This is all business down here. This is bare business down here. Like the moment you if sell side can unlock this shit in here and just go like this, ding. Like this opens up like that. It opens up like later on. Bears, if you want like party time, 653.78 baller. If you want, like, give them the end of year Santa thing, but if you touch this, like, let me show you guys what this means here. So, like, this is December, right? Here's December, right? Like, if you have fucking, here's the first, right? Like, we don't even need to go down here. All we need to do is, like, we can get down here. Just this. And that's all it needs. Like, and you can fucking do whatever you want here for Christmas. But that shit is like, woof. I'll explain some of this guys to you guys here. Like, here's 700, right? So, like, this is risk off, right? Let me explain what this risk off means, okay? So, if they're able to swing us down here and just break that right there, it doesn't fucking matter what they get for Christmas. It really doesn't fucking matter. Because this fucker is gonna go like, it's gonna be like new low down there, and like it's already started. You can see it. It's like right fucking there. That's December 31st. I mean, party time, man. This fucking thing right here. If they're able to get down here like this, don't get freak. If you're a bear, don't be all weirded out and be like, oh, it's gonna crash. These fucks will run this thing up. You know, like fucking up here. Even if it went up to 700, it wouldn't matter. Like that's open. That shit's open for business. Or not yet, but it will be. That fucking shit is open for business. It's like right there. I don't give a fuck what you do up here. I mean, that's the A right there, right? That's the thing. You see it? There's the A. I mean, maybe they go up there. There's the fucking thing right there. It's already started. Right there. And that's summertime over there. That shit's summertime right there. You can see it. I don't give a fuck about 700 anymore. Now you're talking about like, there's 616. There's your rejection. There's your 5 fucking waves right there. Woo! And see this blue box right here? See that blue box right there? If they really want to fuck around, like come up here, let you off the bus, rock that fucker down. There's your fucking thing up here. As long as you hold that. And then it's wham, wham, wham. All right, you ready? Bigger view, ready? This shit breaks down and trades 653. I can't tell if it'll go to 42 or not. Be careful of the end of your, this is your end of the year trade. It could go to 700, it might not. 696. It ain't gonna matter. Because it ain't gonna matter because what they're gonna do is they're gonna mark their bottom. That's your new low. This is gonna be a fucking bloodbath in here. What's really crazy is I don't know when this is, but let's look at this on a 4-hour basis. All right, maybe not that violent. Yeah, maybe that violent. I mean, you're talking about like it's that violent. Because you'll get a low right there, right? Selling may go away is on board. There's your double correction right there. Close that gap. You can see it right here. Get off the bus, rocket down here. New low. Dingleberries, wick. Oh my God. If you're a bear, watch out at the end of the year. There's your holiday rally. Jackknife that shit down. Fuck you, February and March. I think they start selling this shit. You know, this is going to matter here. Like, this whole area here is going to tell you how bad 26 is going to be. Like, this whole thing right here. Let's look at this closely here. Like, you see this right here? Like, you're coming up here, fucking around into the beginning of the month. This is December, right? They hit that fucking low down here. There's the prior. You guys see this? Let me get rid of my stuff here. So here's that prior low right here. So right there. Here's month end right here. There's 1600 right there. So, like, here, get off the bus, and then just start running this shit down into the fucking first of the month. Here's your weekly trigger. So you can see it. There's your weekly trigger, 642. And this starts a process from now into end of year. If you're a bear, do not think we're going to crash here. They're going to buy this fucker like first week of December. And don't discount to trade all the way up here. Like, it would be like something like right here. But you could see him like sneaky Pete this shit. You know, like 26th, 27th. And it ain't going to matter because that low. That's party time right there. And it should start early. And this fucker would like, here's your March, April low to buy. There's your failure. And then they start partying down into summer. You're probably not going to see the low here until June, July. Oh. You know what that brings up to is whatever that recovery is for summer, they'll sell this whole year. Not guaranteed, but no bueno. You can already see them trying to do it right here. They're looking for 642. They're looking for 641.38. Either the 31st, or excuse me, either March 1st or December 1st, December 5th. That's your target if you want to know where it is. Looking for puts or whatever. First week of December. That's the sellers are looking for. God damn. Ruthless. Next two targets, 56 and 42. I'll see you guys tomorrow.